All right, welcome everyone. My name is Julie Seitz. Good afternoon. We are here with the Cardinal team and we're embarking on the next thing that Cardinal will do, which is fixed assets and lease accounting. So let's go ahead and get started. We have a couple of things that will just get us going. First thing that I wanted to do is just quick introduction of folks. We are going to go around the room so that we know who we're talking to. Noting also that this session will be recorded. Pause for laughter. And the reason we do that is because there are going to be a couple people who weren't able to make it, and we'd love for them to be able to hear and share. But we also will use it for our own internal purposes going forward. So just be aware of that. All right, so taking it to introductions slide. So we'll talk through our project team members so that you know who's on the Cardinal team, and then we'll go to the audience and have everybody introduce themselves. Okay. All right. So Julie Seitz, I'm one of the project managers and have been on Cardinal, I don't know, for about 15, 16 years. Helped with the financial implementation and then did HCM as well. All right, I'm gonna turn it over.
Brandon Tepper, I'm an analyst with Cardinal. I haven't been here very long, but y'all haven't scared me away yet.
Hi, and I'm Kim White. I've also been here since the beginning of Cardinal, worked on the finance and HCM implementations. I did retire and I am back working part-time on special projects and helping post-production support.
I'm Sridhar Kamatala, the production support faculty, same like Kim.
The change lead on the Cardinal team. I'm staying before.
Hey, I'm Vijay. I work with PRT. So I did recently a job recently.
Excellent. Awesome. And then we're going to start with our friends in the back. These are not Cardinal team members, and welcome.
And Emily Shea, General Accounting Manager at PDH.
Excellent. And then why don't we start front row and go all the way down? I know, it's amazing, isn't it? Like, first day of school.
Yeah. I'm Laura Martin. I'm an analyst for the DOA. So I'm leading Charity as the lead analyst at DOA of capital assets and lease accounting. Hello everyone, I'm leading the actual lead of the financial development expert.
Daniel Dos Santos, with Fabulous.
Dan Morrison, the chief financial officer at the DSA police.
That's it. Courtney Sheriff, the controller at the Virginia Lottery.
Penny Fellow, controller for small officer at DMV.
I was the DOA of the general logistics supervisor at GMS.
And Sharon Parkey and director of conservation and recreation. Much easier to say CR, but
Good afternoon, everybody. I'm Laura Ellis, back as Deputy Director for Administration and Finance at TCR, so I work with Sharon.
Hello, everyone. My name is Audrey Butler Nelson, and I'm an asset analyst.
And I'm Sharon Wu. I work at the Rogers and he shows to do stuff. And I am currently the acting fiscal officer and the reporting manager.
Good afternoon, I'm Janine Kvavic. I'm an asset and reporting manager for PETA. All right, good afternoon. My name is Julie Wong. I'm the controller with the DGS.
Good afternoon, my name is Wei Levy. I am the director of financial management for Virginia Department of Health.
I am Katie Case. I am the deputy director for general accounting at Virginia Department of Health.
John Sotos, one of the assistant directors of financial reporting for the Department of Accounts.
Hi, I'm Susan Jones, Director of Financial Reporting at the Department of Accounts.
Will Harris, capital assets supervisor, Department of Transportation.
Betsy Wilson, assistant controller for general accounting and financial reporting at VDOT.
Jason Vinatelli, VDOT Assistant Controller, also for capital assets.
Good afternoon, everyone. My name is Marika Monroe. I am over budget operations at DOC, and I'm also over fixed assets.
Doing good, city budget analyst at, corrections and fixed asset.
Jason Cornicky, SCC, full budget financial.
As you were, right? That's an equivalent of the FCC, that's the operations.
And I'm Mike Carroll, I'm the IT director for TCR.
I love it. So now y'all know who we're talking with, which is amazing. Now, we have folks on the phone, and I saw Maggie Rice come in. Maggie Rice.
Hi, everyone. I'm Maggie Rice. I'm one of the project managers for the Cardinal program. Good to see you all today.
Excellent. And then folks on the phone, start alphabetically. Bilal.
Yep, this is Bilal Khan. I am part of the Cardinal post-production finance team.
Chantel. Chantel, are you on?
Did you see me, Julie? I'm walking through the stairs. Chantel Cox on my way down, GL team from Cardinal PPS.
Amazing. So also starting all of our year-end stuff. So thank you for walking down the stairs and working. And then I think Shravanti's on the line.
Hey, good afternoon, everyone. I am Shravanti Gandhi. I am also part of Cardinal post-production support team.
And so that looks like everybody. All right. So great news is that we've got a fabulous group of people and a fabulous agenda for us all today. All right. So FAACS current state and LAS Plus current state. So every time that Cardinal does one of these projects, what we like to say is, where are we and where are we going? So the whole where are we is obviously there are folks in the room who use FAACS as a central user, which means they use it for online entry of your capital assets. You may also use it for controllable assets. But there are also folks in the room who have their own system, and they are summary users. They're sending us information so that we have a full ACFR. And then we don't have in the room some of our higher ed friends who just send ACFR attachments. But there are multiple ways, and everybody's a fabulous whenever we do these things, and there's different profiles of agencies. But what we are looking for is the process by which you are doing things. So this today is going to be talking about what you do and why is it important and impactful to the Commonwealth. So that is for FAACS. It's also web-based and it's maintained by DOA. Thank you, my DOA friends, for being here. We're also DOA. We have the summary assets, summary users that we talked about, as well as the who use Form 4. We also send information over to Cardinal nightly, so we didn't know if everybody knew that, but all of our FAACS entries that get created in the system for the asset management system, then they are sent over to Cardinal on a nightly basis so that we keep everything fair and square. And we also, and you'll hear this, is that general fund, the 1,500 fund is reconciled on a daily basis as well. So all of those amazing things for the accounting pieces go pieces of partial. And then, as I mentioned, some of the asset folks have, or some folks have that separate asset system. But it's all important because it talks about what is our as is state. For LAS Plus. So LAS Plus is not only for our lease accounting, but it's also for our civitas. Some people call them civitas. I don't know. It's like you say tomato, it's civita, it's also web-based and it's also maintained by DOA, and it supports all those amazing GASB that keep coming at us. So 87 and 96. And as some people will say in the room, who are fabulous accountants. But that's for tomorrow's day. So for folks who are coming back tomorrow, be ready for that. And then again, the higher education institutes are the fund report lease directly to DOA for outside of. So it's just the lay of the land for as is. Okay. What we are going to do, so interesting is that it's cold fusion, right? Which back in the 80s. Now it's 2026 and cold fusion technology is going away. So it will no longer be supported. What that means is that we need to take FAACS and LAS Plus off of those platforms, that they will be retired. We are going to then bring it into the Cardinal PeopleSoft scope. Okay. Things that we have in here. So the current plan, pending project funding and approval. So these are things that are going on in the General Assembly right now, but we do want to make that notation that have asked for that funding and we are expecting this project to be moving forward, but that's a caveat. But the current plan is that we will replace these things and we will use it with our PeopleSoft methodology that we've used before, and we will use it for our overall ERP, which is Enterprise Reporting Planning. Things that we're looking for from this, we obviously want to reduce risk because we know that we're not going to be supported, but it will also help better the business process. We will try to standardize any processes as best as possible, and we will use the software as best as possible to do that. We will meet requirements. So every time that we do one of these projects, we create what is the business process, but then we look at each individual piece of what are the edits, what are the approvals, what are the reports, what are the inputs, outputs that are needed. And each of those individual pieces and parts are then considered requirements that we build on to make sure that the whole system works. Let's see. We're also leveraging our delivered integrations with Cardinal Financials, which means that all of the goodness that's already in Cardinal Financials will be used for the future. And we, believe it or not, whenever we had this vision back in 2006, FAACS was on the roadmap, let's call it. And what that means is that we always assumed that we would bring fixed assets and lease accounting into the scope of financials and make it a full business process integration. Meaning that with fixed assets, many of you are probably aware of this, that assets are bought in purchasing, but currently purchasing does not, the EVA does not talk to Cardinal for lots of the Commonwealth. So we're going to try and figure out how to make that happen. We are also going to make sure that we get all of the assets in the system so that we can do all of those amazing AFRA reports and all of the operational reports that you can see. Let's see. There will be automated workflows. So unlike, again, today, what we're going to be talking about is the as-is of what do you have today and how are there separation of duties. But we will also start thinking about what will be in the future. So we'll need to make sure that we have separation of duties, that we have workflows where they're needed, and that we're leveraging all of those. And if it makes sense to have notifications or compliance things, then we'll bring that in. Also fabulous audit. So everybody loves audit. Waiting for them. Just kidding. But audit will then just be a part of the system and it'll be part of that embedded goodness that then we don't have to necessarily have all that paper trail that we do today. And speaking of paper trail, so we will also have robust accounting for all of our reports, and both operational as well as financial. Okay. So that's the loveliness of what we are visioning. Today's objectives. So what we are asking you to do is we are going to analyze our current state. And what that means is we're going to walk you through the documents that we sent you earlier. We call them our business process flows. So those are they're built in Visio, but they are the flows of how the documentation, the ins and the outs, the pieces and the parts are moved through to make sure the transactions are correct. But we also will have a narrative document, and Kim will talk a little bit more about this, how it matches to our flow. We are asking you for ideas of what are your pain points. So recognizing that some of you may have other experiences, or again, some of those agencies who have your own systems and you know what other aspects of process looks like, we're asking you to bring that into scope so we can understand what are our challenges and where are our opportunities to make it better. And then we want to talk about the integration requirements. So again, the big in would be our integration with EVA, not only for items, but it would also be for our procurement and receipt of our all those documentations to come into Cardinal so that we can do three-way match and bring those documents into the system for assets and all the amazing accounting that goes along with it. Of course, that also brings along lots of challenges as well. We need to make sure that the data in is also good for the data out. And that people are doing it are knowledgeable, because maybe that's a challenge as well. So keep all of that in mind. Okay, and then the last is just, again, we're really, the reason that we have these systems is not just so that we can process transactions. It's actually meant for reporting. So it's meant for the managerial, the financial, and the operations report. Keep that in mind. That's a good business process. Okay. That's the objectives of today.
Sorry.
In scope. Okay, so whenever we talk about business processes, we try to drive it from what is in scope. We've broken it into 4 major business processes, and it's funny, but we call it FAACS, funnily enough, fixed assets. At any rate, we have 3 that are focused on and we also have 1 that is focused on leases. And then you'll see that you have business processes of acquire and maintain, the managed retirement and disposal, and then managed physical inventory. These are all of our assets business processes. And then we also have for our lease accounting, and we have the leases and speedas. And we break that down even further into sub-processes. So again, each one of those flows, those narratives and process flows are broken down a little bit further so that it gives you a better depiction of that next level of information. Okay. Alrighty. Approaches and templates. So the things that you have before you and the things that we sent earlier, just want to let you know. My friend, this is what we do. I didn't bring up my document. These are your business process flows. So each one of them, whenever we go back to that previous chart, each one of these that you're going to see is flow for. Okay? It's accompanied with a narrative. I'm messing up all your papers. The narrative, then what it does is it says, here's what the business process is. Each step on a flow has a number. So whenever we go to acquire and maintain assets, report summary payments 1.1, each step is then going to have that same 1.1 and then X. So the numbers will increment. Each one of those 1.1.1 then corresponds to 1.1.1 in the narrative. So it's a ticket tie back. Okay. You will also see, I'm going to mess them all up and then make it really exciting for you guys. The next thing that we have is pain points. So you'll also have a document in here. Originally, we sent this in a spreadsheet form to you all as our thoughts on pain points. We want to confirm, deny, and add more pain points from an agency perspective. But these pain points, what we try to do is summarize them. So you'll have the pain points in the individual line items, but this is like a summary just so that we can talk about it in a structured way. Awesome. And show. Now I will turn it over, and I call her the amazing Kim White because she is, and she's the fantastic. See, putting head nods, putting this in the air. They're chanting Kim White, Kim White. This is how in low expectations.
Yes, low expectations.
Secrets to life happiness is.
Yes, ma'am.
So Julie just kind of introduced you to the documents. Start at the beginning. Acquire and maintained assets. And just to give us just a brief overview, in case you haven't done any flow charting. These are our standard shape boxes that we use. We have squares for a process that happens within the system. The square with the extra lines in it represents a batch process within the system. A manual or outside step is this crazy shape here. Then we have decision boxes, which are diamonds. I don't think you'll see this in here at all, this one. And start and end places, of course. The little paper representing a document. And really important to focus on today, we'll have lots of kind of crazy looking flows that we really have to pay attention to our on-page connectors, and we call these base plates. So the on-page circle is going to connect you within a business process. And then across business processes, we will use the home plates or the base plate to connect separate business processes. And you'll see that as we go into our first flow. Also want to call out, and I don't know how well you can see this, but each of the flows, we have a little guide down here. A plain box, no shading or anything, is something that an agency does. If it is shaded like this one, it is something both the agencies and DOA financial reporting would be doing.
It's just DOA.
This should, yes.
It's just DOA.
And then
This guy is the both.
this one, which I don't think shows up very well,
Yeah.
has little cross lines on it. And that means that both DOA and the agencies do it. And this one is just something DOA does. Okay. So we're going to start off basically going to go through the flow, but the things I will be discussing are in your narrative. So we're going to concentrate mostly on the flow, but then you have the narrative paper to take home with you as a reference point. So business process 1.0, acquire and maintain assets. We all know that the Commonwealth uses FAACS to record their assets. Twofold. Number one, we need good numbers for the actor. Very important. Lots of high dollar, lots of audit risk with that activity. The agencies need information on their detailed assets. So there's, a twofold thing going on there. And as Julie kind of already mentioned, we do have two basic classes. We have central FAACS users. Everybody in here that's a central FAACS user, raise your hand. And then we have summary users that are only entering summary data. Do we have any summary users in here? Great. And we do have a few agencies that do both. And then we have the few component units, higher eds, that are just maintaining their own systems, sending in financial statement directive information for inclusion in the ACFR. We basically in FAACS have 5 major categories of assets: land, buildings, infrastructure, equipment, and construction in progress that we use for our reporting purposes. And we have broken this business process up into 5 sub-processes, which you saw earlier. Record summary assets, acquire and report on detailed capitalized assets, which Brandon will cover. Record construction and process, which Julie will cover that one. And then back to Brandon for update assets. And then I will come back up for inner controlled assets. So I haven't listened to the same person talk for a long period of time. So let's jump into record summary assets. Here we have what we're calling our governmental fund summary FAACS agencies. They maintain their own agency-based systems. Those systems, of course, have to meet all the requirements of being able to pass audit, RMIX requirements so that they've got good internal controls and that they can produce the information needed to get into FAACS. So let's jump into our flow. We're going to start here with step 1.1.1, enter and maintain assets in the agency system. So the agency has purchased the asset. They're going to get it entered into their agency-based system. And we're going to kind of ask our first question. What type of agency is this? Is this a component unit in higher ed, in which case we're going to flow down to step 1.1.2, provide DOA financial statement data, and then they're pretty much done with this process. We're going to go to end. Our governmental summary users, so these are the ones who are actually using FAACS, but on a summary basis. This step, we're going to actually enter or update summary data about our assets in FAACS. They are then, after they enter it, pass all the online little edits that they entered all of the required fields, they are going to have to send an email to DOA Financial Reporting to ask that that entry be released into the system. The agencies cannot release these themselves. DOA will then review that transaction and determine whether they need additional information or if they are going to release that information. Here in step 1.1.5, DOA is going to release the transaction within FAACS and then update a manual spreadsheet that they keep for their purposes for tracking different types of information they need or when the act for season comes around. This is then going to flow into step 1.1.7, send files to Cardinal. As Julie mentioned, we do have a nightly interface between FAACS and Cardinal. So that creates GL journals to post into the general ledger to record that asset activity. The agencies then can review daily reports in step 1.1.8, which then feeds into a reconciliation process. And as you see, here's our first base plate showing up. Information from our construction in progress business process, sub-process feeds also into this reconciliation step. So as the data is getting reconciled, there are various things that can happen. It can be perfectly fine, where we're getting to our big adjustment question. It looks good, there's nothing needed, we're done, and we just move on to the next sub-process. There can also be some other things. You could review it and say, oh, you know what, that person, they just keyed this number. We've got to do some type of adjustment, so that's going to feed back into our online version, where they're just going to go in and have to make another entry to fix something that was recorded incorrectly. DOA can also sometimes have to do a Form 4 entry to correct some error that cannot be corrected any other way. There are also some really big problems that can happen. I don't think they happen very often, in which case DOA is working with their tech folks to have to do some actual updates on the back end of FAACS and to go in and do some technical updates to the tables to get things fixed, which will then feed into the same sub-process. And this is really getting us over to do more of the monthly reconciliation is what this base plate is leading to. So that is kind of the business process for this piece. Do we have any questions? We'll kind of talk about pain points at the end of all of the 1.0. So you have a little time to think about what did we miss that it needed to wing? We're not agency folks, never worked in fixed assets. So we've done the best we could do. We have worked with DOA to try to get these to this point, but now it's time to really fine tune, add in additional steps that we may have missed, or when we get to the pain point, additional problem that you all are encountering with the current adverse process. Okay, I will turn it over to.
If I have a question, can I ask now or later on?
No, you can ask.
Can I go back please to the same screen? This is based on my experience and my agent. I think documents number FAACS 1.3 should be in the first line, because what happened, we have to send an email to DOA to request them to release these documents. But here you see the documents here go to perform reconciliation. So any CIP transactions, I will have access to release these documents. It should be released by DOA.
Okay.
Also, another concern for adjustment, if I create any record in fiscal year, for example, 2026, I can do an adjustment in the same year. Only one thing, if adjustment for prior year, I have to request from DOA. It's only something different than what I have in my agents.
Yeah. So for awareness, and this is where the art of the flow helps us. Whenever we get to CIP, then what we're saying here is that this is another business process. So we'll go through the entire flow, and it'll be detailed out like this. But and then you'll have 1.1, 1.3.1, 1.3.2. And I get to cover that. So this is just like bringing it in to say that then after we've completed that, then we'll do the reconciliation. Yep. Great point.
Kim. Again, my name is Brandon. I didn't hear any chanting, but that's okay. I'll be covering a few sections throughout today's session, starting with section 1.2, acquiring retail capitalized assets. This process covers everything from procurement through year-end close for central FAACS agencies. Beginning with step 1.2.1, and actually just looking forward to the first few steps. This is where procurement, processes occur, and we've kind of captured some generic steps. These aren't specifically based on, DGS's procurement policies, but these are what we think happened in the order of leading up to entering assets in the system. So we're definitely going to ask some questions to gather more information from you all on procurement later on. But with step 1.2.1, this generally starts with agencies initiating purchasing in EVA following COVA procurement policy. PO receipt and other documentation from procurement supports the FAACS entry. From there, we move to step 2, asset identification. The Commonwealth institutes a proactive approach to identifying assets. The steps about engaging property management personnel before the asset arrives, confirming the custodian, identifying the location, generating the tag number ahead of delivery. Proactive identification helps ensure assets are recorded timely and accurately rather than being discovered later on. When the asset's received, the receiver records receipt and personnel inspected against the PO. One challenge we've identified is that agencies lack a standardized process to proactively identify and track capital assets through the procurement lifecycle. We've seen that agencies typically rely on reactive identification after payment processing, which increases the risk of incomplete or delayed capitalization. I wanted to open it up to a few questions for everybody just to gather more information on procurement. What does the procurement and asset identification process generally look like at your agencies? Anybody want to share? So it's all perfect, right?
With VDOT, we're definitely chasing assets after an invoice is paid and has been received. We've really struggled to engage, and of course, we're huge, to engage everyone who could be potentially buying, a piece of equipment. And this mostly relates to equipment. It could be being purchased on a purchase order, small purchase charge card. We have a main con vendor. It's all over the place. And so there's a lot between that 1.21 and 1.22 that we're missing, on this. And, you know, the reports that we get out of Cardinal, we've tried to make a larger query on our own, for review, but this is taking up a lot of resources, for VDOT, not only within central office. We've got about 3 people working on that expenditure review throughout the month. And then we've got, up to about 10 to 12 people across the district doing that, expenditure review and trying to find things.
We definitely want to expand upon our review and documentation of the procurement process, but this input really helps us do that. Anybody else want to add anything?
So, Virginia Department of Health is a very large, complex, decentralized agency. Probably one of the most complex, not as big as VDOT, but they're very complex, multiple fundings. So our process is any procurement has to go through a RAP process. Currently we call it request to spend. However, that process does not talk to finance system. So it's instead of proactively, it is more of a reactive approach. So Office of Financial Management, which is under my oversight, our fixed accounting team, every month, we would pull report from the finance system to look through all the charges for the entire agency, just like this lady described. You have to look at a sub-object code. What could be a potential fixed asset? Then we will contact the work units, the cost center, say, hey, you know, I saw you just charge this sub-object code. I do not see a form coming from you. So another thing we do is monthly reconciliation process, which helps a lot. Our fixed asset accountant does send out a monthly request to all the work units to have them to update their fixed asset form, their disposal form, lease and all that stuff. And if we pull the report from FAACS, from LAS Plus, for each work unit to reconcile and certify. So that is one of the internal control we have established. In a large complex agency like this, we have to have this monthly control. And also we have established policies. Every year we're doing a wall-to-wall inventory. We force every work unit to physically do those inventories and report back to our financial management office.
That's something that we're going to get to later on, and with physical inventories, we'll definitely dive into that subject. Did want to say that, you know, when you were describing the review of the expenditures, I saw some heads nodding, and you know that resonated with everybody, and I've been through that too. So just want to make that clear. Can I ask what system the request to spend occurs in?
It's a service now. I don't know if you've heard about that.
I'm familiar with.
Yeah, it's a requisition. So anytime you want to spend money, it doesn't matter what, you have to do submit a request to spend. And that will route it to the chain of command in our agency. So say you want to spend, buy something, right? Buy a monitor or a computer, you have to do a RTS request to spend, and it will be routed to your business manager. And business manager is authorized to enter a POE in EVA. Not everybody can create a POE in EVA. Only those roles that are authorized can do that. So that RTS system actually is going to route your request to the next approver.
So, anybody else use RTS service now, or is that only VDH?
It's only VDH, yes. We just recently implemented that. It replaces many, many different kind of requisition system previously within the agency.
And you do a manual entry in EVA? The business manager is doing a manual entry? It's not
Yes,
interface?
ma'am, to create a PO.
And are you using any like fields from EVA? For instance, so EVA's NIGP for item, are you using the EVA item master, or are you using your own NIGP master whenever you do the rec to spend? Or do you know?
I do not know the specifics.
Okay.
I do not know.
Okay.
But I'm sure they have probably some flexibility in entering those items.
Okay.
Yeah.
Okay.
I'm gonna add one more thing. So there's also, and I don't know, if we're the only agencies, we do not use EVA exclusively. We also create POs directly into Cardinal. So I don't know how that factors in. And are we thinking about our capital asset thresholds? You know, being $5,000 is actually really small, the dollar amount. And you brought up NIGP.
Mhm.
And so one of the questions I've had since starting at VDOT and understanding that, is there any way to leverage NIGP to identify capitalizable assets? And kind of flag it for review from that way?
Yes. We are getting into the 2Bs, so stay tuned. But I mean, I can give you, if you want to wet your whistle. 1 minute.
Because
We're not going to finish. Kim just told me. So just for awareness, so whenever we talk about nomenclature is something that the Commonwealth uses to identify, and it links back to category. And there's a lot that's built into that. But what that does is it says, what is my account code? What is my NIGP? What is the IRS tie? All of that goodness comes into that. In Cardinal, in PeopleSoft as delivered, we can do something at the item level, which is why I'm bringing it up. And it can say, this is an asset. And you can do thresholds so that whenever it comes onto the PO, and this is part of the integration that we'll have to figure out, but when it would come onto the PO from EVA, we would link our NIGP and our item master so that it comes in, flows through, and it'll then automatically flow into your asset management module. So then you don't have to do this identification. It would be something that would be a real-time integration that could be processed. And then you could add additional things to it, like tag number, like, you know, whatever and you can say which nomenclature it is tied to, and it can default all of that goodness. It's a very powerful thing. And then you have to say, you know, what are some of those other considerations, right? So what if we miss something, then can we go back and tag it? Can we bring it in and just enter it in online? So there's lots of goodness that is to come. Yeah.
It's a great idea. So we also enforce a policy that you don't have PO, not processing your vouchers. This was not enforced in the past. So we are enforcing that. My accounts payable team, if there's no exclusions, I don't see a PO attached, it'll be rejected.
Hurt you very much. So from
Everybody does.
Oh, exactly.
I just said it's not gonna work.
Well, and so part of this, and this is a huge shift in the way that the Commonwealth, right, because we are siloed systems, 3-way match is external and it is manual. And there's some e-invoicing that EVA implemented, but it doesn't do what we need it to do, right? So what we are trying to figure out is a way to then have it come in and say that it's a PO is required on that voucher. So whenever you create the contract, whenever you create the PO, then you can default that. And then whenever you do your matching process, it won't allow the voucher to match because the PO isn't attached. And so it would do that again automatically. There's a lot of benefit that could come from that business process. There's also, it doesn't take away the need for procurement to talk to accounts payable, to talk to GL, to talk to asset management. You need to still have that coordination, but the system can help enforce some of it. And then make the business process better so that you've got all of that goodness built in. Keep them coming.
Identify. Yeah, it's on me.
Vita. Yep, Vita.
So in VDOT, since we have our infrastructure assets, and usually when we look, like we don't look them as assets, we usually look at projects. So we review projects, and within these projects, we might we have one asset or multiple assets, and we know that GASB will we might have a new GASB that we're gonna change this, and we're gonna replace the infrastructure in. But for right now, we look into projects, like a project phase, we run a report, Cardinal, like a SQL report, says identify the new project. And then we take them into a separate system. It's a financial reporting system called WDesk or Tibia. And we built extra logic in the system to either to help us with the determination of if these projects are capitalizable or not. And then once we identify the capitalizable project, we give them a category, and based on this, we create our form for to submit it into FAACS. So again, that's is we not look into assets, but more into a project. And if this project is capitalizable or not, regardless of what the assets that are included within.
With VDOT in Cardinal with AP vouchers, procurement projects, I feel like tracking capitalizable assets at the project level should kind of connect between all systems.
Would love to.
And that's SIP, right? It's CIP, and I don't know if you guys call it SIP or
Yep.
CIP. Again, tomato, tomato. But our business process 1.3, you're gonna love it because it's laying the groundwork for what is as is.
Yeah.
And so we've got those notes down, but there is additional functionality if you're using the project costing module, which VDOT has.
Yeah.
So we'll talk about that whenever we get to as is or to be. Chris, you had something.
One thing that helps me is, I'm sending our budget office and our other analysts, on their projections. They have an equipment tab on there, so because we've got 26 facilities, 55 PMP offices and CCAP offices. And I've got 110 FAACS users that are putting records in the FAACS on their own. So the stuff that goes in the EVA.
Yep.
Now looking at the potential fixed asset report, when I'm doing a download for each and every one of them, building a workbook where I'm kind of overseeing that. And then they certify to me on a, every
Quarter.
semi-annual basis that they've added all their records into FAACS. Sometimes there's things that are miscoded.
Yep.
But by me sitting in that office and that being part of our projections tab for equipment, because I roll into our equipment portion of our projections, I'm able to kind of stay on top of that, and that helps out tremendously. But what I'm finding is still, with so many users, we just, and the turnover
Users internal.
of these
Yep.
people in the knowledge base is always an issue.
Yep. Well, and DOC, Maggie Rice, that's DOC. But DOC, you guys have extra special things, right? Because not only do you have an internal service fund, but you also have prisoners who might get bored and take tag numbers off of things, and you don't have tag numbers on things anymore. So good luck to you, sir. Just kidding. You're a good person.
I think most of them are just trying to make MASH.
I love it. I love it. Yeah. Those are great. Those are great.
I need to add something. Our agent, we have something special, and I think this case, sometimes all the agent can do this, especially if we need to do interface between that and that. This is great development. We feel something if we look for the purchase order with the receipt report. We have, for example, 20 lines. 20 lines, it means 20. We have some questions, especially if we need to see which was which. At the end of this PO or receipt report, we produce not 20 items, but 25 standalone items, for example, which is, it will be qualified with cap manual, all that qualified, it's in some requirement. So if we need to do this, we have to do some development in EVA first.
Yeah.
I suggest this if we can add addition of the receipt report, which is order, which is, it should be is together. The majority need to ask some questions for the processor of PO or receipt report, which is which. How many standalone items, each to some requirement to try to align with our campaign. Because if you do this, it's great, but it will not answer our questions. Still, we need to go back to the divisions for completion to answer some questions for us. We can add this step in EVA, attach it with these POs. It will save a lot of time. Back and forth mails and asking how many items, how many sales qualified. So if this available from the first time that they create the receipt report, it's beyond
That subject more on the to be, design side of the upcoming system. So EVA will never interface to FAACS itself, but hopefully to placement system. But I do believe that, if we did the items in the nomenclature in the same way that Julie had outlined for procurement, and those items were used appropriately for capitalizable purchases, then those would go to fixed assets, and you can work to group up multiple items into an asset or split, one large purchase into many assets later on. So I think that there is a way to work dynamically, but you may still have to communicate with procurement to figure out what's going on with a purchaser PO. Does that answer what you were saying?
Yeah.
But I think your point is excellent because essentially it's not just, again, we have asset managers and fiscal officers in here. What we also need to build in are our procurement folks to make sure that whenever we talk about the business process and we know that that's a huge pain point, then how do we incorporate them in? So it's a great next step for us. Love it. Yes. Do you guys have your hand up?
No, well, I'm just gonna say that I agree with
gentleman up there, I think a lot of our pain points can be resolved if we build more of the data capturing at the procurement. So I'm hoping as we're in, we're integrating that fixed assets and LAS into Cardinal, that the evil piece will kind of come in conjunction with that or soon thereafter.
That is the goal. So the goal is that we will work with Eva to do integration. Eva will remain, but we will potentially figure out what are the new controls that we will bring into Eva so that when they are flowing through for assets and leases, then it brings everything through and then there's less of a burden on the agencies. And you're going to get some other things like through a match, which you have to do on your other POs in the system anyhow. So there's other stuff. Yep.
Right. Try to use the data, send in the data to the new module as I'm on Cardinal. There should be the integration process first.
Yep.
Cardinal and the Eva.
Yep.
Because the payment will somehow pull from Cardinal, data sent over to Eva first. So we'll reconcile that, make sure the payment for that PO got all completed. Then that data from Eva can be sent over to Cardinal. So that should be some kind of integration process first. Before send everything to Cardinal view.
So there's a and can that raise your hands real high? Who all does receiving in Eva? You and I mean, like you're not on video, so and it's okay. We're trying to figure out the pain points to make it better. It's okay if you guys in Eva, because I know Vida, you guys are special friends. But it for the folks who does receiving in Eva. We got 1, 2, 3, 4. Okay. And do you do it for everything or is it like hit and miss sometimes or?
Everything's gotta have.
Okay. Okay. Okay, great. And you had your hand up too? Partial. Okay. Okay. And you do all. And does that mean that you have, is it an actual, like, do you give everybody access to Eva then?
Requisitioner is responsible for receiving physically the goods and then receiving an Eva and uploading the invoice into Eva. So he can, if he can take it, get the data and do that through your match.
Okay.
Outside of.
Yep.
And.
Great. Great. Okay. Great. I'll write that down. Yep. Okay. Okie doke.
Feel like you could talk about
All day long. I know. That's an excellent segue. So why don't we bring it back, and then we'll get through the business process.
Yeah, so moving forward from asset identification to step 3, capture asset infos, where the asset is, the asset manager assembles the documentation needed for FAACS entry, pulling together details from the PO, receiving records, and property management personnel, just like David had explained. We reach a decision point to say whether the purchase is capitalized. And if we follow the no route up to the base plate for FA 1.5 enter controlled assets, that's where we would follow a process that Kim will describe later on where, if your agency tracks controlled assets, you may be entering them in that way, not as a capitalized asset. But if we go the route of yes, where the purchase is capitalized, then we will arrive at step 4, acquire a capitalized asset. This is where the asset's possessed, and there's several acquisition methods, including purchase, installment purchase, construction, trade-in, and other. Moving forward, we reach a decision point for whether we're entering a single asset or multiple assets. And if we follow the route single, we'll go to step 5, enter, update, master file asset. You all know that agencies have 30 days from receipt to enter the asset into FAACS, and all assets must be in by the fiscal year-end deadline communicated by DOA. Timely entries essentially ensure capital asset balances are complete and accurate. Some of you all mentioned the Cardinal potential fixed asset report query that can be used to identify expenditures that may require capitalization, which helps catch assets on the back end and reactive. I want to mention for this point, you can see in the flow diagram, there's many inputs that that flow into enter update assets coming from other sections that we cover today, as shown in this master file inputs box. So a lot of things flow into the step where we're creating. If we follow the multiple route from the decision point, we end up at steps 1.2.6 and 2.7. I'll talk about these together, entering details into the multiple transaction generator and updating their characteristics. So for bulk acquisitions of the same asset type, users can generate up to 25 records at once with shared core data. And then in step 7, they update unique fields on those generated assets that hit the transaction file. I wanted to ask how often do your agencies use the multiple transaction generator now?
I use the many times, but I hope that you have a plan to create more than doing. Sometimes I have, for example, last year, I have a project with about 10,000 items. The majority staying corrected. So I know the maximum 25, and we used this options, but sometimes it's not.
Yeah. Definitely consider that and see how many is the right number. But
or that's it. I mean, to upload from Excel spreadsheet.
Yeah.
Yeah. Not quite sure.
Yeah, so the question is, will we have spreadsheet upload, which we absolutely would love to have, so that's going to be one of our requirements. And there is also copy an asset functionality, so if you only wanted to do one, you could do that too. Yep.
Anybody else use the transaction generator or steps? So from there, we arrive at step 8, edit and save asset transactions. This is the junction for both entry points. Asset records are saved. FAACS validates entries through edit checks, and missing or incorrect data triggers error messages that must be corrected before the transaction can be processed. Once edits pass, the transaction goes to hold status and is ready to be reviewed for release. From there, we arrive at another decision point, whether it is a prior year transaction. And if we follow the yes route up to step 9, request DOA review and release, users are probably familiar. You would email the FAACS shared inbox with certain details and request their review. After that, we would arrive at a decision point where does DOA release the asset? And we're going to go down no and look at another decision point for update or delete. So, maybe they, DOA is looking for more information. Maybe there was a small error in one of the fields entered. They would probably send this back to you and ask you to update some things, which would round back to editing and updating and going through the release process. If maybe the asset isn't needed, maybe it's a duplicate transaction that doesn't belong in the system, you may proceed down the delete route and end up at step 12, delete asset records. They remove the data and cannot be corrected otherwise. They do not leave an audit trail, and it's and it also removes all accumulated depreciation. Prior year deletions require DOA release, and transactions in hold or incomplete status for 90 days are automatically purged from the system. Going back down the route where DOA releases the asset, if they do, then there's a similar step here, 10, up for DOA to update a spreadsheet with data for actual purposes. If it is not a prior year transaction, and then the agency can release their own current year assets if they have release access in the system. So we would proceed to a decision box where, does the agency release the asset? If not, they would go through the same considerations for updating their deleting. If they do, we would move to step 11, along with any DOA releases where the assets are reviewed and released officially. Once released, the transactions update the master file immediately. It's eligible for the nightly Cardinal interface, and it appears on any daily reports. Does anybody have anything to add on to the release steps and decisions that we covered?
And I just want to clarify, what's mean here, record CIP on the master file? What type of transaction? Because is that not a summary?
Here.
Yeah.
Yes, so this is a base plate saying that there are steps in the next section that we're going to cover that feed into creating an asset in this process. So that is how it enters these steps here. Does that make sense?
Yeah, I saw it like master file, we have the asset in master file, but CIP, it's.
Yeah, that's a good point. Right.
Well, I think this is where you're.
Yeah.
P is done.
Yeah.
Yeah.
Pulls out a
Which-
project to make
Yeah.
pre-CIP. Yeah, we will definitely get to how all of these connect as we go through the steps.
Thank you.
Any other questions or additions? Great. From release, we'll move on to a system process in step 13, send the file to Cardinal. It's the FAACS financial file that interfaces to Cardinal nightly. Translates the FAACS chart accounts structure to Cardinal accounts and post general ledger activity. Number 14, step 14, reviewing daily asset reports. I know you all are reviewing FAACS reports daily, right? That's part of the process. No, okay. Well, I kind of see these as like timely reports and maybe daily, maybe monthly, maybe annual, but at this point with all the data, you can access the reports. For step 15, run month-end process. Month-end close runs in FAACS before Cardinal's month-end close. It includes backups, purging disposed assets that are older than 3 years, running straight line depreciation, and rolling forward the fiscal month. After month-end processing, depreciation transactions are available to post to Cardinal through nightly notice. While we're talking about depreciation, I wanted to ask, does anybody use depreciation methods other than straight line? And if so, what tends to drive that need? Everybody's on straight line generally. So we would use the interpage connector to go to the next slide, where the process continues with step 16, performing monthly reconciliations and updating assets. So central users reconcile and certify the asset balances monthly. Summary users reconcile their agency-based systems to FAACS and Cardinal quarterly. So that's why we have the base plate for 1.1 report summary assets kind of feeding into this reconciliation steps. Along with that, DOA also performs a daily high-level reconciliation between FAACS and Cardinal to validate the GL interface. That's something that Julie had mentioned. I guess, we kind of touched on what some of your reconciliation processes look like, from some of the comments earlier. Does anybody have anything to add on about their monthly reconciliation? Anything that takes maybe longer than it should?
I don't know if any other agencies deal with this. We actually had to do some reclassification journals after the FAACS to Cardinal process runs to break out infrastructure from highway infrastructure, construction in progress from our highway infrastructure work in progress. We've got a couple of different equipment categories that we reclass out. That might be just a VDOT problem, but as a,
Yeah.
an added step.
Yeah.
That we're doing in there.
It's a very detailed way to track the balances, but it's necessary to the process, and I believe that the replacement system should be able to compensate for customizing the way that the asset transaction is supposed to be achieved. But I understand how that can be a time-consuming process.
Wow.
For step 17, reviewing reports and making adjustments. So if there's any variances that are noted during the reconciliations in step 16, they're investigated and they may lead to various transactions and facts that are needed to fully reconcile. So that's where we reach a decision point where, do we need to update assets to reconcile? If yes, we look to these base plates for various transactions that may need to be made. You might need to add more assets. You may need to dispose of some assets that shouldn't be on the books and FAACS. And you may need to consider some things for physical inventory. And that feeds in, so you make the updates and you reconcile again until there are no more adjustments that need to be made. Then step 18, the last step is yearly close, annual close. At this step, agencies must clear the transaction file of any unreleased assets before the close date communicated by DOA. I believe DOA tends to contact agencies that have, held or incomplete assets at year end, just to help them, address them and clear it out so that, we can proceed with the financial reporting and actual process. But the system process, allows the year-end close to roll year-to-date balances forward. It zeroes out fiscal year depreciation. And that is everything. So we've covered all the steps that we've noted in section 1.2. Are there any big steps that you all, complete that you may have missed here?
Nothing big, but something, and again, maybe that's not a problem for other agency, but Cardinal FAACS closes on month's closing. However, Cardinal some closes on fiscal month closing. So sometimes we have a timing issue reporting. That's not maybe as easy for everybody, but sometimes it's for us.
That's something that we'll add to the pain point list.
Yeah.
Is that something that where we just need a little more coordination with those teams that set those dates to see what can be done?
Yeah, sometimes like we do, as Betsy mentioned, we do reclass entry. And sometimes like these, like once we have the formal course said, for example, it's happened in February and FAACS. However, our after the Form 4 posted into Cardinal, into the GL, then we do reclass entry. And sometimes the reclass entry push into like March, for example, before the fiscal month closes. And that's causing some issue when we do our monthly reconciliation. Again, maybe that's not a big deal for everybody, but sometimes for us, and we try to detect it very as much as we can, to process a journal entry at the same time as we do the Form 4 at the same month. Yeah.
Is anybody else having any problems with the timing of Cardinal and FAACS monthly or annual?
I think some employees give us to us give the floor. Sometimes if we have a variance for reconciliation between Cardinal client balance and between FAACS 307A. So if we have any variance, sometimes it's timing between end of February and 1st of January or whatever. So what I have to do, I have to reach out to DFA. So I suggest if there is any report available in the system to save some time to figure out by our staff, it will help us instead of reach out to DOA.
Yeah, we'll add some requirements for reporting around the ending of the month dates to see what's posted so you can figure that out and reconcile more accurately.
Yeah, so, another thing, if in mind, I don't know if this is the type of question for to enter the data to create assets in the system. We have specific digits. For example, for PO, there is 8 digits only. But POs in our agent, it's 10 digits. So, and for all the fields, there is a specific digits. You cannot go more than, for example, 20 for the description, 1 or 2 or 3 or 4. So I guess this is weakness also in the system. If there is any way to do some improvement, to have enough digits to add more description or something, if we need to say some story, this asset belongs to vehicle number, blah, 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 or this is PO should be 11 digits, not 8.
Yeah, I agree. I think that's a good thing that we'll start to consider. I think there's a balance between characters in some fields. We don't want anybody writing a novel in the description field, but more than 20 sounds reasonable.
Right, yeah.
So it is interesting. So whenever we talk about these requirements, these tiny little things that build up the business process, we've started drafting requirements that we would love input on. So after we've come through these sessions, then our next step in the process is to finalize requirements, send them out to you so that you can say, yep, I agree with this. For instance, if it's VIN, right? Like, or if it's serial ID, or if it's tag number, or if it's the insurance number or whatever, there's lots of different fields, of course, in assets. And then the devil's always in the details, right? Because then you say, oh, I can track it, but gosh darn it, now I have to track it. And then do I have people to actually do that? So, we'll need to figure out like what's available for use and what's practical. Yep, but that's a great one. Oh, yes, ma'am.
Like, thank you Alec, for this point, because like in FAACS we have 9 digits FAACS ID. In Cardinal we have 7. So usually when we have an asset in FAACS, like we submit this asset to our general, I'm not sure it's just unique to VDOT, but we submit this asset to our general accounting and they put it in Cardinal. However, we have 7 digits only, not
the chart. Are you talking about the chart field value on the distribution? The FAACS ID.
Yeah. Like when, when we run a query, we have a FAACS. I think they have to add, like, we add like L, for example, for land, and that's take one part of the number of the FAACS ID. So usually we have the, like, enough digits for us to use for the FAACS ID in Cardinal. That's right.
Yeah.
Is it?
Yeah. Once a field, it has specific digits. You cannot go through within what you have in the system. This is a problem.
Is it the asset ID on the, or is it, what do we call it? Just asset on the chart field distribution?
Yeah.
Okay.
Yeah.
Okay. Asset ID. Okay.
We use Cardinal, for after we enter our asset in FAACS. We send it over to our chart field maintenance and they actually create an asset ID for that so that charges can be charged to that building infrastructure item, and they can track it that way. And I think, so where we have struggled with using FAACS only and why we find ourselves using other systems is because there's not enough information that we can track for a decentralized agency with assets, over 9 districts and central office. It's hard. So we actually are using that FAACS number to identify the location. So our first number will be a district. The second number is a residency, an area headquarters set. And so it's this.
You love smart coding.
An asset.
Okay.
So then, if we had more ability, this module in Cardinal would allow us to be able to track those assets a little bit better if we could let go of some of the compensating systems that we're using
So
for that purpose.
Okay, so so good understanding. So what for awareness, so whenever we created Cardinal originally, we obviously didn't roll out the asset management module. That asset on the chart field was meant for tracking budget and expense against the asset. So it wasn't meant to be much more than that because we didn't have full functionality. However, when we go to Cardinal Asset Management, there's a new field that was called actually Asset ID. And I want to say that it's 12 digits. And it's, again, a representative, you know, you can either enter it in or you can increment it, auto, you know, do the next number. And then there's a bunch of other fields that would allow you to do query on it in the system. So we happy to chat through some of that stuff because I think that that's.
I just want to clarify and make sure I understand what you're saying, because this was one of my questions.
Yeah.
They were very particular about that asset ID.
Yep.
Having it to use.
Yes.
Expenditures.
Yes.
So the addition of this module wouldn't take away.
It will not take away.
Chart field. We would have another one.
You would have a different field, but it won't be a chart field. So it doesn't roll up to your ledger and it doesn't get it's basically a tag on an asset. It's you know, it's a something to identify that it is an asset. So then when you have those source transactions, it can come into the asset management module. It's not and that field is either you know, auto-generated next, or it can have smart coding in it as well.
And I know this is a future state situation.
Bring it.
Question.
Yeah.
But one of the things that we struggle with when APA comes is they're looking at our expenditures and trying to trace that expenditure to an asset record. Is there any way to make?
Oh my God.
Your head will be blown.
We didn't plan this.
Okay.
We didn't plan this. The answer is yes. So the beauty of it is that then if we bring in that purchase order, or for VDOT, you have the purchase order and you have the receipt and you'll have the voucher and you'll have the project, all of those source documents come in and then you can trace it back to the originating module. That's the beauty of an ERP, right? Is that's how it's meant to be. It's meant to have all of those systems in place so that you can do that level of reporting.
So also,
yes,
with relation to grouped assets, one of the things that's very hard for us is to be able to match the controlled assets into the group that we book as an asset, because there's just nowhere to put all that information.
Yep.
So it would be helpful if we were to track controlled assets in the system.
Yep.
That we somehow could say these controlled assets or or when we, in the grouped assets. So when we enter the assets, we can say this is a grouped asset made up of these controlled assets, like some way to really link those without having to read wording or memo or keep it outside the system.
Yep. So yes, all of that in a bag of chips is what we're planning for. It will allow you to group them. You can have them as controlled assets, and then you can figure out what needs to be depreciated versus how what's capitalized versus controlled. All of that needs to be factored in whenever, and amazing requirements, right? And when we get to 1.5 controlled assets, then we'll talk about that as well. Great.
We could talk about CIP. SIP.
I know, I don't know what's right. I did say something. All right, so SIP, I'm just gonna go with it. But SIP is what we were kind of alluding to earlier. Oh, we've got questions, people, hands raising. Maggie says, don't even worry about it. What time is it? Let's do a quick time check. 2:30. Break. Maggie wants to break. Can I do my SIP talk?
Yes.
I promise it won't take too long. It's one of my favorite things in the entire world. But for CIP, I know you laugh, but it's amazing. So for CIP,
She just likes saying SIP.
SIP it's basically a reporting classification, right? Where it's a project of 3 months or longer, and it will create accumulating costs so that you can capitalize a project into assets. What we have here is, again, just like all those other base plates,
There's feeder things that come into it. So there's feeders from accounts payable with vouchers. There's feeder from the expense module, which is where you have employee expenses that may also create an asset. And then you also have time and labor, so that Cardinal time and attendance or time and labor can also bring in additional information to then feed into your projects. And all of this goodness comes into 1.3.1, which is what today we have in for FAACS is a spreadsheet, an offline spreadsheet that agencies can use to record those transactions. You can say, I'm going to use my template and I'm going to bring in all of that amazingness. And that's all offline. The 1.3.2, which is you're recording that SIP transaction. So that is, and again, at least on a quarterly basis, we ask that we use Form 4 to capture all of the financial information. Bring it back. But that's where the information is being captured and recorded in the system on a quarterly basis. Just like every other amazing process that we have in FAACS, then you're going to do 1.3.3, which is requesting DOA to review, and you send in an email to them to say, yep, this is ready to go. We're ready to do our SIP. Go ahead and review it. Every good review has a decision point. So you can either, DOA says, no way, I need it to update. So I'm going to send it back to you. You're going to update it. Or yes way, I'm going to go down to 1.3.4 and they're going to release SIP in the system. Easy peasy. Again, another step that occurs is 1.3.5, which is adding it to the spreadsheet. What DOA does is, because, and just like everything else, they're adding it to this master spreadsheet so that at the end of the year, they can do an act for reconciliation. But also they have another new report that they're using to do it a little bit more automated, but it's not enforcement yet. Okay, so then what happens is because it's been released, that new flag that flips, that's what allows it to say, yes, I'm going to go and send it to my interfaces. So then I can send it to Cardinal and or I can have it on my reports. So that's what that 1.3.4 does. It enables us to get down to 1.3.6, is sending all of that immediate information over to Cardinal. And that is similar to everything else. It's sent nightly. One thing that we have noted is the COA crosswalk. So SIP, oh my gosh, different day. FAACS does not have, where am I? FAACS does not have the new chart of accounts in it, so then we have to crosswalk that in order to bring it into Cardinal so that our transactions are correct. Again, 1.3.7 is similar to everything else. You have all those reports. You have daily, weekly, monthly, pre-year end and year-end reports that are all available to you. This is where it gets fun, is that project completion that we were talking about. So if the project is, I'm going to go not completed, then gosh darn it, then you ask, was that project canceled? If it's not, it just follows the whole darn thing over and over. It's a circular reference. Keep on going. If the project is canceled, and this could be in the form of canceled, it's abandoned, it didn't meet your capitalization thresholds, whatever the reason may be, that's where you say, okay, let's get rid of this darn thing. I'm going to then classify it as an expense. And then the agency has to do a reversing Form 4 entry. We could have said, go back to DOA, do Form 4, et cetera, but we didn't. But you get the idea. So that's when we just say, all right, we're going to end this thing. This is no longer a SIP. Okay, let's come back to, is the project complete? If yes, then 1.3.8 is where we complete the project and we're going to reclassify the costs. So this is, I like to consider it a 4-step process, all in this one little bucket. But this is where first, whenever we talked about you'd asked the question in 1.2, whenever Brandon was going through it, why do you have SIP coming into that? And that's this connector. So this connector is basically saying, at this point, that's when you're going to add the asset, and you're going to actually say, yep, it's ready to be capitalized. What you agency folks need to also do is you need to reverse the SIP balance on Form 4. And then again, you will email DOA to do the release, et cetera. And then if there are any other costs that come into that project, then our understanding is that they are non-capitalized costs and they're just expense. All of that amazingness is what happens in 1.3.8. And then again, that FA 1.2 is where we send it to do the ad. So that's again our off a base. What I didn't talk about is all the way at the top, if that SIP was not considered, oh gosh, I've put it in and it should be deleted, then we go back to the delete, and it could be 1.3.10, which is, again, you're going to just get it out of here, let's remove it, incorrectly entered, or it may also be something that was incomplete, and if you have it in hold, on hold, or incomplete status, then DOA may knock on your door and say, hey, there's a couple things out here, you want to clean them up before the year end, let's make it look fabulous. And then you remove those, and then they remove all of the data from the master file. Okay. Easy peasy, right? Everybody loves it. Any questions, concerns, comments?
I suggest something. I'm sorry to ask many questions.
No, I love it.
Insane, but for the CIP, there is any way to provide the user this report peer project for all the prior transactions. Sometimes I have project across the last 3 years, and I need to know how much the accumulated expenditure I put in this project. Also, it will help me to do some reconciliation between what we have in the center and what we have the accumulated expenditures people. I don't think I have this report. If there is any plan to provide us with some report like this.
We'll write that one down as a requirement. I think that's a great one, right?
Yeah.
Because it's what is needed to.
Yeah, that's a clear need. We need to know everything that's accumulated in a CV project.
This project to see how much we spend if there is some missing.
Completely agree.
Also in this module, we have the same limit digits. If I need to add extra clarification to help DOA to approve that, to approve the CIP, because when I create 626, they ask me, where is the assets number? Okay, asset number is here. But the CIP 626, before a few days, I create 626 was $4 million. But the assets $13 million, there is gap. So definitely DOA will ask me what is the variance. So I need to explain here where is the variance to make the job easy for DOA and to save some money for us.
So for project, and you're talking about the project chart field.
Yes.
Yes. Project chart field is 10 digits, 12 digits?
10.
10. And then
Auto numbered.
And then it's auto numbered because it's shared across the Commonwealth. We have another field on the project that is like, I can't remember if it's called the agency project ID or something like that. Do you know what that is and how many digits that is?
Do not, because you can take that.
Okay.
Okay, but I can ping Tony.
Yeah, can you ping Tony? That would be great.
What's the name again? Project.
I think it's like agency project ID or something like that, but it's
the last field in the CIP. The right side, the last field. We need to add some more information to help the field.
And our projects guy is not down here. Or no, is Tony on the line? I can't remember. No, doesn't matter. He will be. Because VDOT, you guys do your own piece. We love you so much. And you'll have some different business process than the rest of the Commonwealth because you're using project costing. However, the rest of the Commonwealth needs to be able to so whenever we go to do this, then we'll need to make sure that we have some kind of indicator in our project setup so that it's an easier mapping and reporting for you. Great. We can get, that was the requirement that we need. I'll write it down. You got it. I got it. Off the dome. Yep. Awesome. Okay, so I heard chants of break. So let's go ahead and take a 10-minute break. And one of the things that there's other people who are not here, but they said this is an amazing conversation. And if we need to do a follow-up, then we can figure out a time to do that. So we don't want to rush through this because we want to gather as much of the goodness as possible. Let's take a 10-minute break. Time is 2:41. See you at 2:51. Snacks on the side, cookies, chips, bathrooms out to the right and then a left after the elevators.
Speed.
Oh my goodness. Are these ones? I mean, you got all these.
There was, like, do you remember where we put
Here's all the just.
you remember where we put, like, it was the old VDOT, project ID? And then we let other agencies enter it. Maybe we go back to the workbooks. Then. For chart of accounts, maybe, okay. Connie Fisher.
This is a converting project I'm looking at.
Can we go to, the chart of accounts, projects? The workbook from configuration? No, it was
3 or you want VDOT?
or 3, because VDOT we did, yeah.
Converted,
Yeah. No, it's a good conversation. And we were, Kim was pinging with Stacy and Stacy said, let's, keep the goodness coming. Ellen was our COA in one, wasn't she? Who was second? Yeah, Ellis, wave 1.
It's all right that I'm not taking notes. I feel like I'm gonna be up there for so long. It'll all be disconnected.
Yeah. It's tough business.
Yeah, please do.
Do you need me to look at it?
I don't think so.
Want someplace to put the difference number.
He,
So it's existing. It's existing.
so I thought that we have the auto-generated project ID. But then whenever we went to do conversion, we told agencies, you could put your field in this, you can put that ID in this field. And then we built reports off of it. When we did, I thought,
Because when we converted, we let them tell us the project number they wanted to use. We didn't auto.
what did we do for VDOT?
I don't know, VDOT was its own beast.
I thought we had something in there. Or what's the federal project ID? Are you talking about agency?
Because mine is minimal, right? Ever since
Yeah.
I've been with the PA, I
Yeah.
only have like 3
Yep.
details.
Yep.
I
Yep.
don't see any of that ever.
Oh, but this is what agencies say.
Yeah.
But do the agencies have all of this, or do they get the user fields?
I think they can.
They can have them, they just, I don't know, it does anything, but
They're,
What will it do?
let me think really, really hard.
you got all these user fields, but I don't know that anybody puts anything in them.
Workbook reviews, templates. Yep.
Disaster number responsible.
Agency specific instructions.
Project name.
Somebody did some fancy stuff. Darn, darny, darn.
I have an external project number.
Yes.
Did you see that? Yep. It's on the projects tab at the very top.
Yep, that's the
I don't
one.
know how long it is.
And then modify project values. Description. CFDA.
External
Value.
projects.
7. Example. Special value. I'm pasting it.
It does look, if I look at one of the state police's projects.
They have stuff in there.
And that one, don't want to. Whether we actually have it in a report anywhere is totally.
My recollection was that we did have it in the report. So let's ask Tony to.
Unrelated to all of this, what's the project status of the potential middleware Cardinal and the agencies, the project that was last fall that the DOA was doing?
Oh, the one for cloud you're talking about. Yes. So what,
Yeah, kind of hot and heavy.
It was
They
hot
gave
and
us,
heavy.
so said,
Yeah.
go study it.
They said go study it, and then the General Assembly said not right now. So it's because so whenever we looked at which other states are doing Workday and Oracle Cloud and SAP, then we found that no one was doing full statewide. They were only doing pieces and parts. And then, for instance, Missouri was supposed to go live twice. They haven't. And they're supposed to go live in July, and they've de-scoped, and they've de-scoped their DOT, so they don't do federal billing. Georgia is another one that is doing Workday right now, and Georgia is also supposed to do their DOT. They also de-scoped their DOT. And so whenever we talked about the replacement of it, and then when would it occur? And then we also looked at how long is it so they're going to keep people's after rate. And they've essentially they've said oh, it's an annual rate cycle. And so we said, all right, well, let's back that up. How long would it take us to not only do finance but also HCM? And then we said, okay, let's look at that and then figure out what is our risk on the onset because people aren't able to do their implementations. what is the risk at the end, not being able to get to, like, being able to be able to convert. So a lot of this has to do with like marketplace, but like the state of Florida is implementing PeopleSoft for the first time. And they posted their go live, it was supposed to be in January, and they postponed it in February. So we know that PeopleSoft is, Oracle PeopleSoft is gonna cut them off. They've already budgeted it. So all of that to say is that we are not going to go to the cloud yet. We will do some of these other system replacements, and then what we will also figure out is like the stuff that VDOT has is stuff that other agencies want. And so projects, accounts receivable, billing, same, there's a few, right? And then this procurement thing is what we're also like bringing in as part of assets. As part of our quick balance integration. Agencies, it's a huge big one, right? It's ridiculous that it's not enough. So it's more of a, let's try and get more people onto one platform and then keep us going. And then it is roll out the cloud stuff, but the cloud stuff won't happen for like another 10, 15 years. Yeah. I know.
I will not be. He started I was waiting. I got my first PRS statement.
Yeah, you're like, hey, good luck to you, buddy. Yeah.
Very sorry to end the break.
Oh.
That'll get more low diet. We'll move into section 1.4, which involves updating and maintaining assets. This includes tracking maintenance, which is optional, evaluating whether expenses should be capitalized, and handling revaluations, impairment. You'll notice the section connects to several other processes, transfers, physical inventory, and disposals that all moves in and out. So it's a lot that happens. We'll look at step 1, update asset details. Throughout an asset lifecycle, agencies update FAACS records to reflect changes, whether that's a new location, a different responsible position, an updated condition, or optional detailed maintenance tracking. Keeping the asset record updated ensures that the FAACS system records, physical inventory, and financial reporting are all up to date and reflect the agency's true assets. One limitation that we found with updating assets is that most fields cannot be updated on fully depreciated assets that are still in service. Agencies often must delete and re-enter the asset as a workaround to make basic corrections. I'm sure everyone who's a central FAACS user has experienced that. If you all wanted to raise your hands, good. Have you all seen that before? So that's definitely something that we need to fix to allow just basic data updates on fully depreciated assets that are still in service. You had something?
No, I was just saying, I can hear you, I just can't do that.
Okay.
State your appreciation once it's gone.
I'm sorry, could you repeat that?
You're talking about fully depreciated assets, delete them and add them back.
Yeah, because you're not able to update certain fields on fully depreciated assets.
It's done.
I mean, you should be able to update, certain data fields or descriptions.
If it's stuff like that, I just send over a request. You guys, DOA runs a job and updates inventory for me on that already. So it's done behind the scenes as opposed to me actually logging into the record.
Okay. I haven't seen that before at my time with DOA. Have you received similar requests?
Just for the inventory date.
Like to update, certain data fields on a fully depreciated asset behind the scenes.
I mean, other than inventory.
Yeah.
Not really. It's very limited.
They used to do it, and then when I was there running, I did it, but it was before the changeover. I would send it over and run the job, and it would update the inventory dates for the agencies or.
Yeah, that we can update,
Yeah.
but there are certain fields, other than the inventory.
Other than inventory, what else you need to go in there for?
I guess it's.
Application, like a application that we moves around quite a bit in our agency.
I mean, if you're gonna delete the asset and then add it back up for a different location, yeah, but everything's gotta be the same. We do that.
Yeah.
as well.
That makes sense. Yeah, just, when it gets re-entered, it's just changed exactly what needed to be changed. Everything else is the same. Technically, there's no real change to asset balances or depreciation if that's done right, but it is a pain point that we're tracking. I did want to note these base plate connections leading into step one, update asset details. We see transfers of assets and aspects of physical inventory that lead to, certain updates of assets, like you're saying, location, or even like, intra-agency transfers may need to update certain details. So that's what we're seeing here with these base plates flowing into this first step. From step one, we arrive at a pretty large decision point, and there's a lot here with replacement, maintain, or repair. And we're going to go down the route of maintain first to step two, which is evaluate asset expenses. Each expenditure on an existing asset should be evaluated separately. The key is the key question is whether an improvement, it's an improvement that adds value or extends the useful life, or it's routine maintenance that should be expensed. DOA has established guidance and criteria for evaluating capitalizable repairs and maintenance. Proper classification of the expenditures matters because it directly affects valuations, depreciation calculations, and the accuracy of the financial statements. From step two, and I just want to note this base plate does not belong here. This one that says ARO, that was something that should have been removed in the flow for you guys. Going down to the decision point for capitalized costs, if we follow the yes route, we land at three types of revaluation methods that are done in FAACS. I want to preface that before we walk through those three steps, it's worth noting that FAACS lacks modern revaluation functionality to systematically adjust asset values and recalculate depreciation. So it's a problem that you all have seen many times with your central FAACS users. Events like partial disposals, improvements after initial capitalization, useful life revisions, they all require workarounds to get the cost and the depreciation correct. So if we move over to this first decision point where the cost increases the asset value only, but it does not impact the useful life, a separate asset record is entered into FAACS and linked to the original using a reference field. The new record is assigned a nomenclature with the useful life set to expire at approximately the same time as the original, so both records depreciate parallel. If we follow the no route and we go to the next decision point, which is the asset fully depreciated, we'll look at the no route for that. If an asset is not fully depreciated and the improvement extends the useful life, the asset update or the agency updates the nomenclature code on the original asset and enters a separate linked record with a matching useful life. Use linked very lightly there. It's by some reference text field as usual. In this method, FAACS recalculates depreciation based on the updated useful life and the overall asset value. If the asset is is fully depreciated, we'll go to step 1.4.5. If it's fully depreciated, the original asset's useful life stays the same. The improvement is entered as a separate record with its own acquisition date and appropriate nomenclature for useful life. Only the improvement record depreciates. The original remains fully depreciated. I guess I wanted to, raise this for everybody and ask how many of your purchases are capitalized with improvements to existing assets, just to see what volume you made. See that very often. Rarely, maybe.
It's something significant, to be honest, but not every day, every month. But we have many items to provide some improvement for the assets. But I think this is available in the current assets. You can add under the acquisition, you can open another line. That, for example, if you create asset before 6 months, go to the same asset and add another line in the end after the acquisition cost. You can add another line and you can. Yeah, that's the same.
That is a method to add cost to the asset.
Right.
But it doesn't necessarily fit into these three that we outlined here. And the reason why is because adding cost to the original asset recalculates the depreciation on the additional cost back to the original acquisition date, which may not always be the intended accounting behind depreciation expense for the addition. Does that make sense?
Yeah, you're right.
We used to create additional tax ID. It was an improvement, like we add a new asset with a tax ID and we add the additional cost.
Yeah, that was exactly what is outlined in the steps there, so that seems like policies and policies. So all of these three revaluation steps end up converging into a base plate for FA 1.2, acquire and report on detailed capitalized assets. That's because we were entering and updating asset records. It flows into that step that we outlined earlier. If we go back to the capitalized cost base plate and follow the no route, we'll reach step 6, perform repairs. Routine repairs and maintenance keep the asset in operating condition. These costs are expense and not reported in FAACS. Since they do not extend the useful life or add value to the asset. In that case, we flow to the end of the flow diagram. If we make our way back to this original first decision point, we've got a few other things to look at. So there's a route for replacement. Generally, if an asset is replaced, we'll end up disposing of the asset that's being replaced. So in most cases, we'll be following this base plate connection to like a 2.0 manage asset retirement and disposal. If we follow the impairment route, we reach step 7. When you all determine impairments, you coordinate with DOA to make the appropriate adjustments because FAACS does not have impairment functionality. We don't want to overstay assets, so we really need to stay on top of determining and recognizing the impairment. But there's a few outcomes that can come from recognizing the impairment. So if the asset is impaired to the point of disposition, then we would again flow to FA 2.0 and dispose of the asset. If it is impaired to the point where cost is reduced below, and I say remaining cost after impairment, is reduced below the capitalizable threshold, then we will actually track that asset as a controlled asset. So it would change from a capitalized to controlled asset following the steps in FA 1.5, the next section. And in the case where there's a reduction or an impairment and the asset is still above the threshold, we would obviously record the impairment, but the asset would remain capitalized and would keep depreciating it as necessary. So that then we would reach the end of the flow. Are there any questions or anything to add on to this section? It's. Then we go.
Let's
Hand it
start.
over to Kim for section 1.5.
Hands in the air. Kim White, Kim White.
I'll take both of them, because I guess we're not, we're going to do the same points though, right?
Yes, yes. Yep.
All right.
Here's the piece.
So how many folks in here actually put their controlled assets in back? It's optional. Not many. That's kind of what I expected. So it is an optional thing. You can also use something at your agency, whether it is Excel, Access, your agency-based system, to keep track of your controlled assets. And here we're talking about assets with a life greater than 1 year, but a value of less than $5,000 at the time of acquisition. Of course, even if they're in FAACS, they are not included in any of the accounting entries. They're not depreciated. They are there for control and tracking purposes. And one of the other big differences is that when you have a controlled asset in FAACS, you do not dispose of it. You must delete it. There's an important differentiation there in the way that FAACS handles that. So let's take a look here at our flow for entering controlled assets. The agency is going to acquire a controlled asset. And yes, we know we have all the purchasing stuff around that. We did not repeat that here in this flow. You're following your purchasing requirements. You have acquired a controlled asset. Then we come to our first question. Is the agency actually entering their controlled assets in FAACS? If not, we're going to come down to step number 2, where the agency is entering those assets in their agency tracking system, and we come to an end for that particular thing. For the agencies that do enter their assets into FAACS, you're going to see similar steps that Brandon went over. Is this a single asset or a multiple? If it is a single asset, then you're going to do that data entry into FAACS, filling out all the required information and making sure you clear up any online error messages. If it's multiple, we're going to use the multiple transaction generator, steps 4 and 5. Just like Brandon went over earlier, you can enter up to 25 at a time and then update those necessary data elements that vary by the actual asset. And then we come to the decision box. Is this group of assets capitalizable? And if so, we're going to hook over to our business process 1.2 so that you can enter that capitalizable asset within FAACS that represents the group of assets. Once we've entered the transactions, you're going to edit and save those transactions, no matter which way you're getting to here, either from single or multiple. Then we come to our decision point. Is the agency going to release the transaction? If no, then they're going to need to go in and either update the transaction, something was entered incorrectly, or they may need to actually do a delete and delete that record out of FAACS was entered in error. The agency is going to release, comes down to step number 7, where we're going to actually have the second person at the agency review and release the transaction. You'll see there are no steps here for sending the interface because we're not actually doing accounting for these transactions. There are reports available in FAACS for your controlled assets for you to review, and then the process is to an end for controlled assets. Else one here I wanted to cover. Does anybody have any questions or comments? What are you doing at your agencies? Are you using Excel spreadsheets, your agency-based system tracking your controlled assets? Your physical inventory. They're not walking out the door with their mouth spread to speak. I'm gonna turn it over to your considerations or.
We'll do considerations super fast. So if we go back to the narrative and you flip all the way to page 11, all the things that Kim, Brandon, and I just talked about were in pages 1 through 10. And then when we get to 11, a lot of the stuff that we talked about is in considerations. So I'm just going to touch on these and I'll let you guys read these on your own. First and foremost is the big assumption. So the assumption here is that we have not documented, that we've truly kept our as is to assets only. We have not talked about the procurement side of the house. So that is something that needs to be discussed, but it's not discussed right now. So that's big thing. The other things that we did talk about that I will just brush over whenever we talk about configuration, our nomenclature, which deals with all of our categories, et cetera, that we had talked about in NIGP. That is something that we will need to figure out because we will want to standardize not only for the nomenclature that we have, but we'll also want to standardize with EVA. And then figure out how do we bring that all together so that it's a more elegant process. Y'all are saying that you don't have any straight line depreciation, but we are trying to dig out if there are other depreciation methods within the Commonwealth that need to be configured that may have for federal project use or grants or something along those lines. Let's see. I'm going to jump down to conversion considerations. The one thing that we really didn't talk about was the disposal period. So per the Library of Virginia, I always say Congress, per Library of Virginia, it's 3 years after disposal is what we keep records on. And then we also have the last bullet here is that fully depreciated assets remain in FAACS forever unless an agency deletes or disposes of them. So our scope, whenever we talk about conversion scope, as we've done in all of our past projects, is we will take from FAACS a feed and we'll do some cleanup tasks in there as well. But our scope will need to align with the Library of Virginia. Okay. Are there any considerations that we haven't talked about for conversion that y'all are thinking about? Okay. Reports, we have a bunch of reports listed, and as we briefly mentioned, there's daily, monthly, preliminary close reports and the year-end reports. And there's even the master file extracts, and then there's also a bunch of DOA only reports. But we'll have you look at those, and then if you do have other reporting requirements or thoughts on things that really will be helpful, then as we give you those requirements, then we'll ask you to come back to reports and take a look at that to see if there's anything else that should be added that's not there currently. Okie doke. I'm going to jump all the way to security because I do think that that's, whenever we talk about the number of users at an agency who are either in FAACS or are touching an asset in any way, then we want to, right now, our security in FAACS is really our inquiry, hold, and release at the agency level. But we weren't sure if there are other needs across the agency for other things that the agency may do within the business processes. All right. Think about it. Doesn't need to be today. Think about it. You're going to love it. All right. And again, the rest of it is stuff that we've already covered or maybe just a little bit lower level of detail. So I'm not going to drain anything else in this considerations. So next, we're going to jump over to pain points.
While Julie brings that up, back on any points that you have in the packet for. I'm gonna go through these slides, and I just want to say that I'm not gonna touch on the pain points that are on the slides. The things that we've already, determined, each slide represents a category, and what I really want to do is open it up to you, give you all a license to give feedback, complain, do whatever you need to do, because these pain points really help us build up the requirements and, figure out what we need to do, placement systems, boards, defining the project. So, the first slide is procurement integration. I know we talked about a few questions earlier, but are there any other pain points or difficulties with the current state of procurement integration for fixed assets that anybody can think of? Got a few questions that we'll talk about if we kind of covered everything that everybody already had. Do you have anything to add? So I was wondering how many people or roles at your agencies are involved from the time of a purchase to, when the purchase is initiated to when the assets are entered into FAACS. I want to see if you have an estimate of how many hands or roles that touch across the process.
For the DGS, I think there are many. There's the division people for official team. They are in charge of the procurement process or requisition process. And then for the fact or fixed asset, the fiscal department actually takes care of that part. So I'll see.
And who handles your receiving? Is it your procurement folks or is it anybody at the agency?
Well, it's AP.
Okay. And is that the case for other agencies or are there differences
Requisitioners do it.
for receipts as
Put it
well?
in.
Okay. Mm.
Wanted to ask with procurement, does the process for entering assets differ, or even does the procurement process differ, across different types of assets, like the categories from software to infrastructure? I assume that the procurement process definitely differs across those types, but is there a difference in the way that those assets eventually reach the person that is entering them into FAACS? Is there, anybody have anything to add to that?
Could be manual process, I would say. So our process is if it's IT related procurement. Policy requires to go through Office of Information Management. That has to have their approval. And if the asset goes over to a certain value, IT, I believe every agency has to go by that rule. So when it comes to the fixed asset person, the accountant, it's hard to say unless, like, we have an internal control, like monthly reconciliation. Unless somebody tell us, we would not know. Those routing does not come back to the fixed asset accountant, if that helps. There's not really any automated system that's gonna come back to the fiscal asset accountant for him or for her to capture those procurement of asset.
So then are you just waiting for the GL report that you run out of Cardinal every month?
Report, and also we also have a manual form every month sent out for all the work units to fill out and upload it to our SharePoint of financial management. Yeah. We're at the mercy basically of these work units. It's a decentralized, a very large decentralized agency across the state.
That's why I would say that somehow integrating or including fixed assets And the equal part is so, I think we will say.
Imperative, yep.
And you may even want to include the fixed asset person in the equal approval process, depending on what the account code is. So you can get ahead.
Mm-hmm.
A lot of legwork on the back end.
I don't think everything can be solved systematically.
Yeah.
It's a hot take.
Mm-hmm.
So something we've done, we don't use FAACS, but, something we've done is I've kind of created monthly meetings with procurement, my management analysts to
Mhm.
discuss what's coming. I don't anticipate or expect my procurement team to understand what is it is or is not a fixed asset. My management analyst does, so she picks up and asks the right questions and makes sure, okay, if you're entering that, make sure you tag this financial tag. That financial tag is to figure out, okay, is this a fixed asset or not, by the time it gets to stage.
And do you do that tagging based on account code or you know?
It's the financial tag, it's something we've been working on. We
Mm.
have rating financial tags. This
Mhm.
is a, it's BDA, this could be
Mhm.
a fixed asset, this could be this. Something that isn't an account code, but something that can,
Mm-hmm.
that's the root cause really is the beginning part of it, like.
Yep,
So, I mean, like, and that can't always be systematic.
that's right.
But you have to use the tools you have to get the information at the beginning and reactive
Mm-hmm.
actions.
So is it your procurement people who are flagging it as potential or
My management analyst.
your management analyst?
On a basis and tell them when they create the PO like this as such and such. So by the time
Ah,
it gets to us.
so it's even prior to requisition.
Beginning.
Okay. Okay.
We've been able to accomplish something similar at VDOT. We've only been successful with it with one division, our IT division, where when they're procuring a SIMITA,
Mhm.
or we even recently talked about IT equipment. We get email notification, their system sends an email notification to us
Mhm.
so that we can investigate that.
Thresholds too, so dollar threshold goes to. And sees those and knows that they follow up. She's already had the conversation.
Mm-hmm.
I would say in our case, those are the procurement people.
Mm-hmm.
The person entering the PO, meeting it is possible.
And whenever they're reviewing stuff, is it based on what criteria?
But train to let them know what to look for.
Okay.
Communication between procurement and financial management. It also shows that this can be done at a relatively smaller agency with smaller purchasing volume and a larger agency with tons and tons of purchasing volume. So it's something that we can. Yeah, we hope to have that implemented as part of the process. It has to happen.
I guess if can depends on receipt report more better than the purchase. Because as the gap says, we can create the assets after we receive this unit. But many POs is still pending.
Mm-hmm.
So if we need to add any update in the coding, for example, instead of the potential fixed asset report, which is created by PO code number and voucher, and all of us will know this story. But if we can add this coding in the receipt report, we can.
Mm-hmm.
And at the same time, DA has to update the cap manual instead of events and like potential report. We have option to get the receipt report. At the same time, EBA can provide us with this potential report, even the receipt, instead of the vouchers from the GM.
Mm-hmm.
Because as the colleague said, they create this potential report based in the coding from POs when they issue the voucher.
Mm-hmm.
They spend the money already.
Ideally, in the new state two, POs will go into Cardinal, receiving will either go into Cardinal or be in Cardinal, and vouchers and fixed assets and be in Cardinal. So really all the reports that you're scribing should come from the same system.
You're right, but if you start to depends in the receipt report, you will save a lot of days. This is what happened. The company will give us 30 days from the receipt report. When we receive these items, we create this receipt report within 3 days, and the company will says the AP, accounts payable, needs some days to create the voucher to effective GM. And this 30 days between AP and between fixed assets. That's why many people, I guess, they cannot align with the 30 days. It's not enough. So if we can succeed to start from the receipt report, you can apply this 30 days to create your asset.
So this may be getting more into the 2B and how we design the new system, but I believe we intend to create asset records at the time of receipt of a PO. So you may not even really need a receipt report. Receipts of fixed assets should show up in asset management, and it's just validating that everything that should be a fixed asset got to fixed assets.
But every time you have to say potential fixed asset.
Yeah.
Because you cannot say 100% qualified. You cannot say that.
Yep.
Because there is many issues. Sometimes you have $1 million. All this item not qualified as a fixed asset. So it will, for example, used as a standalone item and all of the accessories, for example. So we could, yes, you assign this to fixed assets codes as we are doing now 5022, but it's not qualified. It needs the employee to look at and to get some information to be sure it's qualified or not.
Yep.
There'll definitely be a point where you're in the loop and able to decide whether it should be there.
Exactly. It's your professional judgment.
You haven't like gotten that far yet, but how would, because it would be great to integrate it for asset management, fixed assets, but some of those items are just controlled. So we want them to come over for us to be able to see and report them as controlled assets versus fixed assets. So if we had something where procurement's like, oh, this is a fixed asset, we would be still have to do our other process of the controlled side. So we would need somehow to be able to distinguish that, or there's a holding, like kind of like what you were saying, that there's like a holding where, hey, we think this is what it is, and then someone from fiscal says, yes, that's an asset, or that's a control, or that's something. So it's like it's a holding for approval, for review, and so that all the information that we might need comes to us, but it won't necessarily hit the asset system.
Right.
I believe the system is designed like that. What we've seen, that there is a point where you can, load in what was.
Well, and yeah, I think we'll need to look at the stuff and things. Because, well, yeah, we will. Because we also need to take into consideration all the different agencies. Whenever we talk about like if it's an NIGP that we're basing it off of and items, then what's controllable from one agency to another may be a consideration. I think that we'll also need to think through, is there a way to get some of that goodness from that financial analyst head and figure out what other aspects could we pull out of procurement transactions that then she's looking for, or he, and figure out, can we build that in so that there can be some kind of potential asset query at time of PO, so that the asset people can have a notification, and then whenever those transactions come in, it can be flagged for action. So there's lots of goodness, and but there's criteria at least that we could figure out what are those pieces and parts that could maybe either, and it may come to the point where we say, we'll do as best as we can, right? But then there might be some nuances that we'll have to do for different agencies. Yep. It's an amazing puzzle. Isn't it fabulous?
Thoughts on procurement?
Software. It has another added level. Instead of already have.
Oh my gosh, are you coming back tomorrow?
Tomorrow.
I knew it. I knew you would because you love it so much. So we are talking about Cibitas tomorrow. Yep. And but it's absolutely yet another, because then you have to talk about like, then is it a project and when does it actually start capitalizing, and is it a software as a service or is it a subscription or blah 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 blah. Blah, blah, blah.
We're actually just talking about this.
Yes.
Morning, GASB 51 and our intangible assets, our software.
Yes.
Purchases that we actually own, not SPITAs. And being able to better delineate between what is planning, expenditure, development, implementation, and training. And pull out those pieces. We're struggling with that quite a bit.
That's not necessarily something you can solve with this.
Right. Right.
More like internal.
But it goes back to business process and how can we make it better, and how do we know that there's software can do only so much, right? Preach on.
Is there a connection?
Time and labor.
If you're doing project call.
Or is that part of this, or is that like a leader? Is that?
It's a later, except for VDOT. And it goes back to project. So whenever you talk about that project chart field, that amazing project chart field that's out there, there's so much more functionality that would allow you to tag your time and labor transactions as project based. And then whenever it comes over to project accounting, you can say, what are projects and how many am I going to create? And then it accumulates all those amazing costs so that blah, blah, there it is. And then you can tie it back to your time and labor stuff. Yep. So fabulous. Yeah. I love how you think though, because it's meant to be, right? It's meant to be. Yeah.
I don't want to spend too much time on general integration, chart of account. We know that there's some difficulties with mapping chart of accounts from FAACS to Cardinal at the moment. That's definitely something that'll need to be dealt with. In a couple of phases, I think Julie mentioned before, there may be some cleanup tasks that we ask agencies to handle to work with their data and FAACS preparation for what we need full conversion of systems to the other. And obviously, we don't have any true integrations from outside systems into FAACS. So that's something that we'll definitely consider going into the new system for any agencies that have their own asset-based systems. Summary users now entering summary entries, hopefully we can think about integrating asset data to bring all of the Commonwealth assets together. Does anybody have any other thoughts to add on to integration of chart accounts? Transaction processing. I know this is kind of a generic category, but there's a few things I wanted to cover. Part of it was the capitalizable labor for either, development, like the projects or, construction projects, whatever that would be. So we touched on that as something that will be coming later on. I wanted to see if, how does the volume and mix of transactions at your agency affects how you manage the workload? Like, are there any types of assets that take up more time than others? I'm sure managing projects probably does, and deciding when to capitalize that I assume that it is also more time consuming to, track the different phases of a software development project or implementation project. Does anybody have any other thoughts on like a transaction volume, what the mix of transactions in the current system?
Think if the upgrade system can, as I said, can let us to upload the Excel sheet to be perfect. For some time, the other dream for me, if we can, for example, after we create this 1,000 records, still have, instead of we have to go to record by record to update the serial number or barcode number. If also the new upgrade can provide us with any update directly to this field. For example, I can provide ID number with a serial number. So I can upload it and the system can extract all this new numbers to be perfect. So everything now will be digitally.
Say the last one again.
Sorry.
Say the last one again, where you
I
were
said,
saying.
for example, we have 1,000 items, 1,000 assets, and the new system help us to upload from Excel to put in this data. After we finish, we have every assets have different barcode number and serial number. Everything is same, but this is to make unique for between the systems. Also, if the system can help us to do another upload to go specifically for the ID number with the serial number.
What is the ID number to the serial number?
For these assets, because what happened, for example, for what we have now, FAACS can provide you access to create 25 records in 1 second. Okay, once you create the first one, go to the option and ask them to add 24 assets. Will take all the same as the first record. So if you look for the 24, it's the same serial number, same barcode number.
I see what you're saying.
One by one to update it.
Oh, I see.
So
Okay.
instead of to spend the time
I see,
one by one, you can do it also.
Okay.
So just a question, do you have all these serial numbers, these serial numbers at the time that you create the asset?
Yes, because
So if we do allow bulk import on creation, you should be able to, add the unique ID in the initial upload and they would all. Yes. But you're also talking about import or like a spreadsheet update, like you update records, which I haven't.
Yeah.
Requirement that you decide.
Right. Another thing, I don't know if I can say this now or not. When we create the assets, the FAACS ask us for what's the division. I expect if the system provide us with main division and subdivisions. For example, for us, we have 3 main divisions. Under each division, we have.
When you say division, does that mean department? Chart field?
For example, we have 2 main sectors. We have BCI, we have BFO. Under BCI, we have 7 divisions.
I think they have.
So if the FAACS can provide us for inventory purpose, can provide us with a list for inventory based in the main sector. Under the main sector, we have some divisions. So it will be very easy for the inventory accountant to just print out and send it to the division to verify these assets.
Yep. And then you, for physical inventory or for reporting?
For physical inventory.
Okay. Okay.
And also, if the system can help you to update your FAACS records or the system with the actual result from the inventory. So after you finish your physical inventory, figure out you have 200 items should be disposed.
Yep.
Instead of to go one by one, you have to do it
automatic.
There's some pretty cool physical inventory functionality in asset management in PeopleSoft, and we have to talk about what is the right way to do that. We haven't really landed on how that process is going to work. that there's, different aspects of scanning, different scanners you can use, so I don't know.
I think, but what you're saying is that you're looking for, and we haven't talked about physical inventory yet. Brandon's going to talk about that a little bit later today. But you're saying you need the reports and the outputs so that people can do it. And then whenever you're done with it, you need to be able to upload your results so that it can do mass transactions on the outside.
Yeah.
So it could be like mass retirements because of theft or obsolescence or whatever, right? Yep. Sorry.
Is there gonna be, field, like agency use fields that we could use for our benefit in?
Yeah.
The new system?
Yeah.
So that we could, if we
Yeah.
had something where, you have two levels, and we need a third for some reason,
Yeah.
like we have regions, districts, and then our CSCs. So if you said, well, you allow two main ones, then we might put them under, like the district and the CSC, but then we have an agency built region.
Mhm.
So then we would still be able to run reports,
Mhm,
be
mhm.
able to distribute them easier.
Yeah.
than having to run like each CSC down.
Yeah.
So that's.
So when we go to, we'll need to look at, and again, per all the different requirements, especially when we get into physical inventory, we'll need to say, how are people running your physical inventory? Some are wall to wall, some are the percentage, and some are by location, some are by division, right? So we'll need to think about how are people doing and conducting physical inventory, and then how does that ripple back into the system for what fields are available? Mhm. Bank of America P card.
Yeah, several things that get perfect via the P card. Any way, sort of like we're talking about with EVA, is there any way for us?
That is, I'll write it down.
Okay.
As an item. And we have, and yes, we know that Bank of America and P card is a. Vida, you guys love it. Right? But it's something that we will put down as, like, wouldn't that be a great thing to then be able to incorporate? Yep. But it's probably not going to happen this round. But it is amazing, and I love it. Hey, write that down. We've got a full load of note takers who are writing it all down, and they're saying 50 people. Everybody raise their hand for it. Yeah, that's great. That's great. Oh, that's nice. That's nice. Did you?
Yes, very good. Like right now, when we have transaction from, let's say, it doesn't happen a lot, but sometimes it happened. Like transfer from one agency to the other.
That's next.
You are keying Kim up for like amazingness. So our next section is maintenance and transfers and disposals. Can you hold your thought? I love it. I love it. We didn't plan this. Didn't plan it. Okay.
Asset evaluation, depreciation. The basic question here, does the way depreciation is calculated FAACS meet your agency's reporting needs?
Yeah.
I assume everyone said they're on a straight line. It's the standard according to the cap. But, just throwing it out there once again, just to see if anybody uses any other method of depreciation. Doesn't make sense.
Do you ask for any requirements?
Yeah.
Yeah, we have, I think the majority we used still on application.
Yeah.
So we don't think we have a problem. But when I download the report for tax, many times I need to evaluate the net book value for the assets when I need to take the decision of the physical inventory if we have any discrepancies or any variance. So only there is one report available. The name is audit report. I have a concern if, for example, if we have one assets with 4 lines. Why 4 lines? Because, for example, when I create this building, I create some building and some storage or whatever. It's related to the same building. So every line, it's represent PO, for example, project number. So when you look for this report, you can see you have 4 lines. Despite of it's the same building. So is there any way to consolidate all these 4 lines in one line as a one asset, for example?
So
it's one ID. It's one.
Yes. So you can, we'll write it down as a requirement and it is definitely in the system. And what you can do is you can add acquisition lines.
So you mean I have to do it manually? Cannot provide things.
So for instance, whenever you do your voucher or you do your receipt, you could tag you could say it goes to, let's say that this building is asset ID 50. And then let's say you're adding, I give like the worst examples. It doesn't matter. And each one of them is an acquisition line. Then every time that you go to receipt, then you can say 50, 50, 50, and it'll come in as it'll come in as a new line on that same asset, and it'll bring in the adjusted dollars.
Yes, my question is available to have consolidated one asset.
Yep.
The system.
Yep.
Yeah.
Yep.
Do you know what's the report name?
It's just part of the functionality. So what happens is just like with you have a header and lines on your voucher.
Right.
So it's the same thing with an asset where you have a header and then you have lines, acquisition lines, and they can have different POs, they can have different projects, whatever you're to bring it into.
Thanks.
But however, like if you don't know those things and then it comes in and it creates a separate asset, we also have parent-child relationship, which again, we'll talk about, stay tuned, but there's 2 parent-child relationships so that you have a reporting relationship for your assets.
That's great.
I sure do.
Yeah, inform for processes is huge. Let's hear from the summary. Just wanted to see, for the summary agencies or even a central agency that use CIP, what has your experience been with the summary entries?
Summary entry is the easiest part we do. Like just like creating the report, it's the easiest part, but a lot goes into this.
Yeah.
Like in EDOT, we have about like 1,200 and 1,400 projects that we have to review annually. And that's a lot of work that we have to combine in order to create the form report. And that's all happening outside of FAACS. No tracking whatsoever other than our own like financial reporting tools that we using in our spreadsheets.
Some of those numbers entered in the summary entries, I wonder how much really went into creating those entries and make sure something like the lines.
Yes, even for depreciation, like we have to calculate the depreciation outside and then update it via summary entry. Nothing happened.
So entry is easy, maintenance and depreciation and aggregating everything is kind of hard to manage.
Definitely.
And also there's a kind of a lack of visibility, at least from the financial reporting side, where you can't really see the details behind some of these entries that are added. So that's a quick summary from my perspective. Does anybody else have anything for Form 4?
What do you mean by error correction for still kind is difficult?
Yeah, that's a specific occurrence that happened. I believe there was like a 3-year running, CIP project. Costs were accumulating. There was some on one project, some on another, and there were decisions, more recently about where those costs belong. We really had to look back and see what those balances were and the right way to move the costs around and, the summary entries to get it in the right place and then ultimately create whatever asset or expenditure entries that result in the project. So just correcting, some very long historical balances was kind of a pain point for some agencies.
They separated them by the code. Like, because we had some reclasses that we needed to do. We had some CIP that didn't have projects assigned to them originally. So we went and basically took them out of the no project and put them into a project. But when we went to reconcile for year end, it was a nightmare because it included those as assets, additions, and it included them as deletions. And we had to go back to like all of our detail. Whereas if we could have said, well, exclude this code or like something like that, we could have said, well, these were just reclasses. These were just assigning like the project or something. We can exclude that because it wasn't a true addition or true deletion.
Yeah, I just have a very simply data entry question. So the current Form 4 contains only 8 lines. So each period we have to upload multiple Form 4, right? So when enter this new system, I'm assuming that will be unlimited lines that every time you can upload. Or put into the.
I'd say that that's a really good pain point that I probably missed, and I feel horrible that I didn't catch that because I agree that only 8 lines probably isn't enough to do some of the transactions that you all deal with. We're not entirely certain how CIP and similar Form 4 entries are going to work in the new system. It's definitely something that we need to design the process for. So I don't know if it's going to be as easy as that, but you shouldn't be restricted with how much data you're going to be entering in the system as well.
And for this point, also, there is in a way we have total for this print out. But we have this 8 lines. The system cannot provide you with a grand total for your transactions. You have to make it manual,
That is going to be a basic reporting requirement. You need to know exactly how much adds up on it. No doubt.
Control totals. Love it.
Even now, the feed, like, I was telling the lady here, in FAACS, like, we cannot put a number in billions. Like, we have to break the number into 2 lines. So that's all, sometimes, like, we have to submit exam from the multiple side.
Yeah, good one.
She saying
Billions, billions with a B.
yes.
Yeah.
Yes.
It also wants some flexibility in what is required to enter. Like, we summarize all of our CIP per type of asset. We do CIP reporting, but like for capital outlay, we've got like 55 different and building infrastructure projects this year. That would be a pain to have to upload each of those individual projects. But maybe have some flexibility. Some agencies might have less than some agencies.
Yep.
With VDOT being on a different process with the modules that you already have, there is going to be some different functionality with CIP that may open up to you.
Yeah.
So I hope that makes it more straightforward, less manual.
But I also think that we can capture the requirement that it's not summarized by type, that like you can, or that the spreadsheet or whatever function that we're creating is allowing you to do like all of your different types on one, so that you're not creating separate 55 different documents. Yep.
And then again, that's maybe a very unique to VDOT, because we're dealing with service sessions, agreements, assets in GASB 94. these type of assets, like, before we put the asset into service, like we have two costs that we have to capture. We have the yield of cost and we have this in partner, and we also have the concession cost. And we have like to to work with them to get this additional cost we can add into the total capitalizable cost of the asset. And of course, that's not happening. Like that's we cannot put it in CIP. We cannot increase it until the asset put in service. So I think like with CIP, also we need to consider additional costs that may come outside of Cardinal.
Question. So is that, well, is it, yeah, so is that, like, are those costs that are already in the system and that you just need to classify them for assets? They're not in Cardinal. So then you're just doing journal entries into Cardinal.
So we don't do a journal entry. So when we do the Form 4, and that's happening in just like at year end when we have a new gas 94 asset, we take the cost from ask as a concession for the cost. We add it and we include it in the Form 4. In FAACS, and that's added into Cardinal after this in the trial balance, but it doesn't connect with any project because it's a cost coming from outside of VDOTs.
So it's a cost coming.
We can talk about it offline.
I would love that.
Yeah.
Yeah, that's an interesting disclosure. Yeah. Okie dokie.
The next area is workflow and approval, so I know that FAACS, there's an ability to improve upon what we're doing with FAACS. There's a lot of email communications, that go into getting assets released. There's a lot of, back and forth with getting users set up with access. And I feel like this is an easy area where, obviously any, additional approval and workflow that's getting system valuable, but we also want to listen to you all to see what sort of approvals you may be looking for with assets in the future. Is there any like agency approvals going on in any of your areas? In terms of, I know that there were approvals for like requests to spend, obviously POs go through approvals. So I assume that.
I mean, it sounds more like notifications than. Right.
Yeah.
Okay.
I think FAACS give us a chance for segregation of duties. So when the user or processor do any transaction, needs supervisor to release this records. I have very basic question. There is any way with the new system can provide me a supervisor see the creation line, the processor name? Is if I have 3 employees, they have a concern regarding one record, I know who's handling. I have to ask all the team. Does this belong to you guys? And somebody say, if you check all the 3 employees, they double check if this belongs to A or B or C.
Pretty much every record in
Teams chat ever
in PeopleSoft has the user ID attached to it, I assume. So
no, if you look for FAACS now for the transaction records, you'll never can figure out who's handling.
Yeah.
This doesn't have any prepared file, for example. So if this you can keep in mind this option will help a lot.
Whoever enters it into FAACS is not releasing it or requesting it.
Right.
Document that, so if they were to ask for it, we could show like this is the person who basically
went through it, analyzed it, put it in the system, and then someone else went in and requested it. We can show the email or the review, send it to DOA to release. But it's all emails and
Yep.
discussion and like that's where saying, hey, I interviewed in, can you go look at them, release them?
Okay, great. Ready to move on?
Audit trail and data quality, and I really don't foresee any like issues in a new system with these aspects, similar to what we experienced with FAACS. So, users in FAACS are instructed or trained to take screenshots of most transactions. And I believe that anything happening in asset management, PeopleSoft would have, a detailed audit trail, even disposals. And I don't think that there will be any issues with it all as we seen in FAACS. I'm not sure if all of you have experienced issues with data quality in FAACS, but there's a couple of things that we've done on the web as a developer for, SQL server errors and things behind the scenes that have caused data quality that should not be happening. Is there any questions or suggestions in this area? Transfers, I think that we'll probably talk about this in the next section, so. We'll probably move on from that. And with system usability and performance, I feel like there are definitely performance limitations. Exporting data from FAACS, such as master file extracts. I don't love the timeout and session times that you get when you log in, but I don't think that that's anything that can change with the field policies that drive that. So that's my own viewpoint. I'm not going to promise anything to you in terms of change. Has anybody else experienced any performance or system issues with FAACS that we may want to capture here?
Is it in a way to, I don't know if you are aware of skill portal from Bureau, Service Bureau. Same as a FAACS, but it's more easy to log in than FAACS. What happened for FAACS every time send codes to email or whatever. Then when you put screw and log in, you have to do some process. If you leave it for a few minutes, it will take a while. And you need to do the same process. And sometimes this code doesn't come immediately to your email. You have to wait, and sometimes you ask somebody, you think we have something with FAACS, they submit us to check. But what happened for Sweet Water Inflow gives you, because I know what happened electronically. Once you log in, it doesn't ask you for username or password, but it's just
Same song.
yeah, exactly. Just this time, So if there is something like this to observe,
We'll log into Cardinal.
we can.
Yeah. Yep. Cardinal 6 o'clock.
Yeah. I think everybody who's logged in the past has experienced exactly what you're talking about in terms of timing out, getting codes, setting passwords, all.
I mean, if you increase the time, it would be okay. If you make it more easy to be okay, you say, okay, you can do something like this.
We will do that.
You will use.
Not in FAACS, in Cardinal, yeah, in Cardinal, yeah.
We'll just log into Cardinal. With a different link.
It's like an error, not an error. It's like I want to run the daily report, see what was released, but I picked the wrong day. And there was no release on that day. It will sometimes just come up and it's like sort of like a blank screen. You can't hit anything else. So I have to go back out like I'm going to do enter a transaction or something and then go back into the reports. Pick the next case. I don't know why this system does that, but.
As in FAACS.
It's FAACS.
When I run it and does that, it pops up into the next screen. I just click on it at the top and it brings me, the other screen, the main screen with the report download is still there. It just, if there's nothing on that day, it pulled up another page, just click out of that page. If you're still in it, click the next day, go to the next one.
Interesting.
Do you have one suggestion? Well, it's not really a suggestion, question. Are you talking with, other, agencies like Treasury, for example? There's a lot of buildings, and so every time we have to do a FAACS transaction, we also have to do, a transaction in risk management, or adding to.
Oh, we get treasury to do anything.
There's a lot of double entry. It seems like whatever we're placing it for FAACS could contain some additional info that can feed Jami, so we're not constantly double keying data into separate systems.
Yeah.
Great examples from the risk manager role that I had as well, because otherwise we're having to get our fixed asset account to give us an updated list of what's, if we haven't had the finance side to then go in and to do either an upload annual entry into origami.
Origami.
Values, up to date versus just at the end of the insurance year, you're certifying your assets and the values.
And is that the only system for that's only treasury for origami? Okay. Okay. So we have not yet chatted with them, but we are happy to put this on the list because if we can do any kind of integration. FAACS and PAPS.
That would be a huge system.
Yes.
Awesome. Great. Thank you very much. All right.
Thank you all for surfacing those pain points for us.
So we're gonna move. If ever, you guys can get up and walk around. Please don't think that you can't. And there's little snickety snacks. We're gonna keep going to the next business process or business process 2. But again, if you need to get up and shake your legs, totally do it. And Kim White is gonna start us off in asset retirements.
Right, so business process 2.0 managed asset retirement proposals. In here, you're going to start looking at, we need to first, that if we have assets in the books, they really exist. That when we are disposing of assets, we're taking them and updating them in fact, so that we do not overstate our balances. That would not be great. There are 3 sub-processes in this main business process, and in asset retirement, transfer capital assets, everyone's favorite subject, and surplus property. And I'm going to cover the first 2. So on to manage asset retirement. You can see this flow is a little busy. Just to point out before we start, almost all of these little boxes are trying to get us to this B page connector, which will take us to the next page. So just kind of keep that in mind as we go through it. I do want to mention up front, we did not bake into this flow group asset disposals. There's a note about new group asset disposals in your narrative. We didn't really have space. Probably does happen a bit, but it was just another way to really get it in there. So that when we're talking about here is when a controlled asset that is attached to a grouped capital asset, and a piece of that controlled asset needs to, it broke, it's gone. So you're gonna have to delete that controlled asset and then go in and update the value of the capitalized asset to lower it. So that are now wrong. So that's covered in a note in your narrative. We start off the process with step number one. We're periodically going to be reviewing your assets for usefulness to determine if they are currently in use, if they have served their useful purpose, or they're no longer functional, they cannot be repaired in a cost-efficient manner, or you just don't need that asset any longer at your agency. So our first decision point is what agency type are you? If you are a summary user, you are going to go in when you're doing your Form 4 entries. That's going to be one of the things that you're reflecting in there is your asset disposals. And that takes us to our page connector on the next page, where you would just be processing your Form 4 entries like we've talked about in the other topics. If you're a central FAACS user, we'll come down this direction and ask the question, is the asset still useful? And we're pulling in information from doing our physical inventory sub-process and our update assets. If the asset is still useful, simple, you're done with that asset for now, until the next time you review it. If it is not still useful, we have a long series of questions we're going to work through because there are 6 different ways that you can dispose of an asset, different categories. So we represent that by multiple questions. Has this asset been reported missing? This could have been from physical inventory, or somebody went to go use the asset and they couldn't find it. It's gone. If it has been reported missing, then we need to enter a transaction to report this as lost or stolen. There are 2 different codes for lost versus stolen. We're going to make sure that we are reporting all stolen assets to the proper security personnel, so a theft report can be done and forwarded to state property management. And we need to make sure we're doing this entry as we find out about it and not waiting for physical inventory to catch all of them. And some things won't get caught till physical inventory, but if you know it's been lost or stolen, we want to go ahead and get that updated. If it hasn't been reported missing, has it been destroyed? If it's been destroyed, then we need to reclassify this and dispose of it as a casualty loss. And this is just one of the other categories. Did it burn up? Was it destroyed in a hurricane or a flood? What happened to it? If that is not the case, do we have this for other agencies? And if yes, we're going to kick this over to the transfer asset sub-process, which I'll talk about next. If not, our next question is, are we going to sell this outright or use it as a trade-in? You could, decide that you're selling it. And if yes, we're going to reclassify this as a sale. No, we'll pick this back up in a minute after we get through here to get to our next questions. If we are selling this, then we're going to kick this over to surplus property, or either that surplus property coming back in. That's what it is, coming in this way. If we're selling it, we're going to end over here at our B connector on the next page, which we'll keep working on. And if it's been a trade-in, we need to, of course, add our new asset that we used it as a trade-in for, and that's why you see this base plate to the business process 1.0. That's for adding the new asset. If we are trading it in, we also need to enter a disposal for the trade-in value, and that's going to be here getting us to the connector. So if it wasn't a sale or trading, our next question is, do we want to just use this for parts? If so, we're going to update it as disposed, cannibalized. And then, you have some FAACS records out there that can show you everything that you have cannibalized, so you can see where you might have some spare parts laying around in a warehouse someplace. If that wasn't the answer, does this asset still have a salvage value? If yes, we're going to ship it off to surplus property, which Brandon will talk about in a few minutes. If it does not have any salvage value, which according to the happening in the year, then we need to update that record as disposed, abandoned, and all of these different categories feed us into our each connector. So here we're bringing in everything from the previous page. We've decided what kind of disposal we're doing. We are entering that into FAACS, making sure we've cleaned up all of our online error messages we might have got, and we save it so it goes to a hold status. So we've gotten all those different disposals entered into the system and picking up anything that's coming in from the transfer asset business process. Is this a prior year disposal? Know what that means? You're going to have to ask DOA to release it because you didn't get it in the right fiscal year. Just like we've seen in the other processes, DOA is going to review that. If they don't release it, then they're going to ask you to update it potentially for something, or the whole transaction might need to be deleted because it shouldn't have been entered. If DOA does release it, they're going to update their handy dandy spreadsheet that they can track of for actual purposes for the disclosure information, so they can figure out how to adjust all their disclosures for prior year items. If it's not a prior year disposal, then the agencies can release it, just like we've seen in other processes. We all end up down here at step 11 to release the transaction. So your user is going to go in, review it, and get that released. It is then available for the interface to come over into Cardinal. Reports are produced that you can go out and look at for all of your disposals. We'll work with your security folks or the proper departments within your agency to investigate suspicious disposals and thefts and lost items. And then we are representing step 15 for the processes that will go out and remove those disposed assets once the time comes in 2 years. Questions, comments?
Oh, yeah.
I know that we have a new gas fee for both as for policy. So I think that it should will be all part of the. So I know that we updated the amendment to reflect the 104.
104.
Yeah. Yes. And the second question is the common. I remember. Now it's about when he's doing the capital asset, but when I was in capital asset, we usually use report 521 to report our balances for the land building infrastructure for the year. And when we had any prior disposal or addition, the depreciation was not calculated correctly. Like we have to go and do some manual work in order to agree with the total balance. So that's something that I just want to bring and that it's happening in fast. Hopefully that's not the case, but it's important.
Right. It's a good consideration. So the system should, in theory, calculate correctly. But whenever we talk about balances and our conversion effort, we'll just need to make sure that we take that into consideration. As far as 104, sorry. I was just gonna say that we have a big ol' assumption, so whenever you look at our assumptions, it just says 104 needs to be considered, and then figured out how we're gonna do it, because it hasn't yet been implemented. But great, thank you.
I'll just say I've already captured a pain point in the list for the depreciation calculations that you mentioned, how prior period adjustments had for either disposals or new cost have issues calculating the depreciation expense in the current period.
Yeah. Because that's like we used to do there. Again, I think it's more when we have a prior addition or deletion. Like we have to go there and just like not just prior year, the prior period depreciation or the profit.
Interesting.
The process to everyone's favorite. Transfer capital asset. We are trying to document the as is process. This is one place that we really hope to gain some better business processes and to meet some of the pain that's out there around this process. So when we're talking transfer capital assets, we are talking both types. Intra-agency transfers, which are the simple ones. Inter-agency transfers, which are complicated. Still will be a little complicated, but we're hoping to make it better with the new processing. For inter-agency transfers, we do use some of the other Cardinal business processes. If you're an agency buying an asset from another agency, you're gonna have to do a voucher to pay them. The agency getting the money has got to do a deposit to record those funds coming in. However, in fact, one agency is disposing of an asset and the other agency is adding a new asset. But because of GASB 48, that is a related party transaction, which means you guys gotta talk to each other. So that you're adding, you've got the same cost information there. And right now, you're just having to use some of the description fields to try to link those things together. So let's walk through the process and can you see how this one goes. So the first step is you're reviewing your assets. You see one, I'm not sure, we might not really need this. You can update the status in FAACS to say it's available for shared use. If it is determined just to be an intra-agency transfer, we get to step 2. You're just going to update that information in FAACS, maybe give it a new responsible person, a new location. And then in PeopleSoft, we've got a location table that we'll have to worry about getting populated with all the agencies. Locations, that all important department chart field, is everywhere in PeopleSoft. Same field, same department structure that you've got set up already. It's in financials and in HCM, and it will also be in asset management. You can update the department that the asset is belonging to. And then this will get you over to the update asset business process that Brandon talked about a little while ago. Now, if this is an inter-agency transfer, we have a manual step here for determining the process. So this is where you're just going to be figuring out, it might be nice if there's no money exchanged for this transfer of an asset, or are we actually, having some funds exchanged? And we'd also be picking up some information out of surplus property to come back into this business process. Our next question is, are we going to exchange payment? And if we are, the agency that is acquiring the asset is going to enter a voucher using our regular voucher business process for interagency payments. And then they are going to add that asset into FAACS, and that's why you see the 1.0 acquire process here. If the payment is, let's go this way first. If you are not the acquiring agency, then you're gonna be entering a deposit, a funds receipt. Once you receive, once the agency has paid you, then you need to dispose of that transaction on your fax record. So you're gonna get to the step reclassify as a disposal transfer. And then get to your asset step here. If you are not exchanging payment, you're the acquiring agency, then you need to get up here to add your new asset. And if you are not the acquiring agency, you need to dispose of your asset. Doesn't sound too bad here, but in reality, I think everybody has issues with some of this process. So we are hoping that we can make it better. It will be a lot of configuration to do in the new system, but you know, it's something that to hope have great hopes for a better process.
Question. If anyone said for cases like this, we have to use the same value, the ending balance from, for example, V dot will transfer, we will give a donation to it. I have manual try to help me to create this assets and facts. They need me to use the same ending balance. Same. So if, for example, the net book value $15,000, shall I use it as acquisition cost in my record? Or I have to use acquisition cost, which is, for example, $20,000. If I use the $20,000, I have to use the useful life as they booked in their system. If I use the net book value of my system, I have to create new useful life. Which is correct in your opinion?
I can't answer that question. That's a facts person.
I mean, ideally, it would be the first, but you'd want to have the same gross asset and cumulative depreciation that you had.
Yeah.
The two should match ideally. I don't know that it would be a big problem. Well, it would be, Michael. That is the accurate way to do it. If you want to put.
Yeah, my question. Shall I use the net book value from V dot as acquisition cost for my agent with new useful life? Or I have to use the historical cost in V dot with the same useful life as V dot?
I believe you should use the original historical cost. And so that way, when you get it in there, you're gonna end up with the same thing, but in the end, you're gonna have the same gross amount of asset and the same accumulated depreciation. So that is the accurate way to do it.
Isn't the problem with that, like the depreciation catch up from adding that asset onto, George's agency? When you add that asset and with the original acquisition date, it catches up all the depreciation and that's recorded to your department. So that doesn't seem like the right way to handle the depreciation expense. It seems like the right way to reflect, the cost and the net book value, but not the depreciation catch up.
It's gonna come up as a beginning balance restatement for one, so in the end, on our report, it's gonna be as if nothing happened, which is what we want.
Okay.
It's gonna be a wash from our perspective, because we're reporting from a governmental perspective, nothing has really happened because we don't differentiate between agencies. In the end, you're gonna have a beginning balance statement going one way for one agency and the other way, which washes. And that's what we want, because we don't want to see any current year transactions going. Nothing has happened. It's just, you just moved an asset.
Right.
That, however you can do that, that's what we'll do.
Yeah, this is better. Thank you.
Hey, Kim promised to bring it, but.
I'm sorry, I had them messed up.
No, that's all right. You like to be on your toes. All right, so for surplus, again, another fabulous business process. Obviously a bit different than transfers, and the big thing here is that, surplus assets are currently in, or not currently in use. They're still reporting for financial reporting and continued depreciation until they're either fully depreciated or disposed. So I'd like to think of this as where is the asset and what's going on with it. So first and foremost, as pointed out, that it could come in from the managed asset retirement whenever you're thinking about how am I actually treating this. So that's our base plate. In 3.2.1, this is calling out that we're flagging it to say, yes, it's available for surplus. And then we have a sell directly. So whenever we talk about selling it directly, the agency can either go and sell it to whomever, and that goes to our transfer assets 2.2. Or if they're going to not sell it directly, then we can go in and work with DGS or OSPM or for DRES real estate. Then it talks about, well, which form am I going to use? So then you have two forms available to you. The 001, which is the DGS form, that is what remains on site. And you keep it at your agency until it has been purchased, surplused by another agency. And then the question is after you've completed that form and after it says it hasn't been sold, then you either say it's not sold and you're going to bring it up in a second, or then you go back to your, is it sold and is it inter-agency, again, back to the transfer assets, or is it an external entity? And that's where it is the managed assets retirement, which again, we talked about earlier. All right, then we go all the way back up and we say, keep it on site. If no, that's where we complete that form 14. And that's when we physically move it over to DGS and there it's transported to the OSPM warehouse in 2.4.4. Once that occurs, then it is still at the agency is still in control of it. Is from what we've heard from DGS that they are it's just an internal. So what then happens is in 2.3.5, that's where we receive and report sales proceeds. So that's where we are actually going to, in FAACS, but not in FAACS, we're going to receive the entry and we do sales proceeds. And then in 2.3.6 is when we have to update that asset as disposed and it's going to be sale or trade in. And then we end. So it's a fun, exciting surplus. Love it. Anything that y'all want to talk about there? People using the surplus system a lot.
We no longer are sending it. The DGS is not accepting surplus. So we are directly selling through deals. And then then once it sells, but DGS manages the revenue side of it, but like we have an account. So they're no longer accepting it at the warehouse, so we have to keep it on site.
Okay.
It's sold.
Okay, great to know.
That's a permanent decision, not some temporary arrangement.
And from the communication I received yesterday, that was the new process.
It was just the effect, like the fall of last year, but there was very haphazard communication around it. Our agency felt into it.
So do we. Ta-da! Yeah, all right, good to know. Yep. So very interesting. So this is another one of those where we will be working with DGS to make sure that we've got the process correct and that we're working with them and with deals to figure out what the process will look like going forward. The accounting treatment will also make sure that we get that accurate as well. Any other questions, comments? On the narrative, the same things that we had talked about in the previous, narrative are listed there, so there's not a ton of differences. One thing that I was gonna point out, which we already talked about, is the GASB 104, and the assumptions. So I don't think we need to pull that document up. So I think we're gonna jump over the pain point and bring it into either way.
So for this business processes pain points, we'll follow generally the same categories. I think there's a few that weren't applicable. I don't think we need to spend much time on integration and chart of accounts. It's mainly the same, pain points or issues that we went over for the first business process, but maybe there are integration considerations around like surplus and gov deals, which we'll obviously need to explore more of. So can you go to the next slide for transaction processing? I wanted to open this up and ask, what tends to cause, delays in reporting disposals and FAACS? And what have all you seen in your experience?
DGF, delays in receiving information.
What kind of information is that?
They tell us what has been sold, because we're so decentralized. They actually communicate, our offices communicate directly with DGF for what needs to get sold, so it doesn't facilitate through our office, but we reconcile the revenue once it's been sold. And so we're not finding out till sometimes 2 or 3 months after it's been sold, to be able to categorize it. So sometimes that's even cost fiscal years.
So something that we discussed with the financial reporting teams, they were under the impression that when you hand over a surplus asset to DGS, that it gets disposed at the time that it gets surplus. So I don't know.
It's not, because it's being decentralized, we're not communicating until a lot of times after it's already sold.
Well, maybe I had.
Right. Well, is Sandra Gill in here today?
No.
Oh, okay. Yeah, I mean, what I would, when discussing GASB statement 104, the indication was if it's surplus property, not real estate, it's surplus property equipment, that it gets sold fairly quickly, within a month or so of when they get it out. How long it takes for them to notify you of the issue. But for GASB 104, our assumption is once somebody, use the field, now there's a field now, FAACS, where if you place something with surplus property, you're supposed to indicate that. So for GASB 104, we would know that, if this was placed, with surplus property, you can reach out and say, what was it sold as of June 30th? If not, then it's going to be one of the ones that we have to disclose, will be sold within a year. Now with real estate, it's a different issue. It could take forever. There's a lot, depending on how it's being sold, could take forever.
I can see how the delay in the communication would also be very disposal. Does anybody else have any examples or experiences with that?
I guess you can correct me if I'm wrong. Yes, we went before. Said that if the management has decision to dispose this item and it will be decommissioned from the operation, you can dispose it immediately. We need to wait until to sell this out.
The only thing that I recall reading is that if it's expected that the asset will be sold within a year of the end of June 30th, right?
Exactly.
However, depending on how the building is being sold, and some buildings require, according to DGS, they require approvals from various levels of management. Some may take longer than others, and they could not guarantee that once it's placed with DRES, that it would be sold within a year. So how we've updated our procedures is we're going to get a report from DGS of all surplus property, placed with DGS and all buildings that have been placed with DRES to be sold And then we're gonna reconcile that to what it is that you guys have indicated facts. And maybe even contact you to verify what stage, what stage of the process is the sale now, so that we can come up with the split.
That's a question. We will give you
Yeah.
if we have a few vehicles,
Do what?
cars. Okay,
Right.
and the management decide cannot use it in the operation. And this it will decommission. And DGS will provide us with whatever the sales value after 3 or 4 or 6 months. Shall I update facts based on the information comes from the division?
You should,
Is it already
you should,
started in the
you should update facts at the point that you are planning to, the point that you placed it with DGS,
Okay.
surplus property. It's not, yeah, as a surplus asset, as a surplus asset.
Yes, yes. Okay. Thank you.
Any other things that have delayed disposals that cover here?
I think maybe, software disposal, like, the way we used to, like record our software, like, we didn't have enough information in facts to know what, like, right now, if we are doing, really trying to figure out, what has been, like, not being in service. Sometimes it's very hard to go back and, like, to know which, like, project it was, and we have to work it, like, go more in depth to try to figure out which software it was. And again, this was, like, done years and years ago, but I think right now we are trying to have some, like, internally, like, project identifications that we put in place in order for us to know which one it is. So when it's time for us to disclose it, we do it.
It's an important point that I kind of want to open to everyone else. Does anybody else have trouble understanding old assets that were added many years ago and what they represent? Is that, something that everybody is?
Think for us, we have to send this information to the end user. For example, if we have some software in our system and we need to verify if this is still working, we have to send this list to IT people to provide us what's the feedback, is it still valid or is the information what happened.
Asset valuation and depreciation. I don't think there was too much to go over here, but does anybody notice issues with the gain or loss calculations or any sort of initiation of disposals or transfers? Generally all pretty straightforward unless somebody has cases that they think of. CIP, again, just want to open it up to somebody, some users or anybody disposing of costs accumulated in CIP. Is there any trouble with doing that through Form 4 outside of visibility and historical tracking? Again, it's pretty easy to produce Form 4. But I don't know if anybody's running anything at the same. I guess the next one is workflows and approvals. It's kind of the same things that we covered on the first business process, but of course I'm opening it up to anything anybody wants to add about potential disposal transfer workflows that we have covered already. I assume that that being able to connect this with other systems like whatever DGS is using or Gov deals would be helpful. Audit track of data quality, I don't have much to go over there unless anybody has any.
Oh, great.
And the last one, asset tracking and transfers. So I guess when multiple agencies when agencies identify like multiple assets that are connected to each other, like how does your agency manage either disposing or transferring those assets that are sort of related, or does anybody run into that?
I think it's clear under DOA, when as you said before, we have to create just one consolidated item in FAACS, and the other you can keep it in controlled item, and you can update later on. But for us, we FAACS is items in Excel sheet, because we have a lot of items. Sometimes we have 300 assets. We don't to just one consolidated item.
Anybody else have anything to add more on this category? That is all the pain points. And I'll look at the full list that we compiled for everything for this business process. I hope to capture everything we can to improve the system, and it's a lot of it.
Okay, great, thank you. So we are not going to talk about physical inventory today. I know you want to, but my goodness, we've gotten so much great information, and I think we've just run out of time. So what we will do is come up with probably a remote meeting for an hour to talk through physical inventory, hour and a half. Something like that. We'll get that on your schedules. It won't be for a while because we recognize that taking time out of your days is not easy to do. So we'll have at least like a 3-week period that we'll try and get it out there as soon as possible, but it won't be immediate. That's what I'm saying. Also wanted to let folks know that we will be sending you an email, a little thank you for this, and then the recording of this session. And we'll also request that you provide us anything that wasn't covered today that you feel like either maybe we missed something, or maybe after you've processed information, you have another pain point that you want to add. Any of that goodness, we're looking for more and more information. And then later as we said before, we will be sending you requirements. So expect 400 little beauties to come your way that just give you a little piece and part of, and they're all broken into the sub processes, but that's something that will come a little bit later in the spring, early summer. And then finally 2Bs. So the next adventure is something that we're looking to start this project in October. So probably the fall time period is when we'll re-engage on the 2Bs. So there's a lot going on, and people we know there's some folks who are coming into tomorrow for our lease session. So we're super excited about that. But other than that, we're gonna give you back 12 minutes because later I'm going to take 60. So thanks everybody. You've been fabulous. Have a fabulous, fabulous trip back home. Thank you.